respect to the valuation call being taken on Bank of Baroda.
Okay, 72.71 on the rupee is a very good opening, considering that we went to 72.97. So it's possible that that minor dip in crude prices is helping, or Reserve Bank is already there in morning trades. But this is at least a very positive surprise for the equity markets, which would have been preparing to see that 73 number. 73 is just a few pice more than 72, 71, but it has a psychological impact when you have a number like that. That's been saved for now. Let's see how things proceed. If there isn't a global rush to, cut down emerging market currencies, we should be able to coast through.
Okay, well, in terms of individual stocks, I mean, you'd want to wait for these headline rates to settle, which are indicating a green tick. But Titan could be under some pressure. It's actually the top Nifty loser right now, down about 2.5%. CLSA has downgraded the stock, and there are fears of that import duty on gold that's really dragging down this space. A couple of these banks that saw big delivery-based selling yesterday, IndusInd Bank, Kotak Mahindra Bank, etc., are under pressure. Yes Bank is also a tad bit in the red. But we'll wait for these rates to settle. In the meantime, Mr. Tulsian, I just wanted to bring your attention to some of these, consumer durable stocks. Some consumer surveys are indicating that this festive season could be hit very bad, and almost 40% households are cutting down on discretionary spending. How would you approach names like, say, a Whirlpool, Hitachi Home, etc.?
See, Sonia, I don't think that situation is really seen panning out, because ahead of the festive season and post this Kharif crop, because Kharif production is going to be seen as at a record level, and I don't see no reason for the cut in the discretionary spend also. So keeping a positive view, in fact, we in fact try to correlate sometimes with the stock prices also. When the Havells kind of stocks were ruling at 700 plus, we were all gung-ho and positive on the discretionary spend maybe about a couple of weeks back, and today the situation is seen to be negative. But things are not seen to be as bad as on the ground. On the contrary, rural spending is seen to be a big kicker for this consumer durable stock, and maybe for the, and in fact, if you go and continue in the same space, there are many ideas, seen quite attractive available in this space. Maybe like Whirlpool, Crompton Greaves Consumer Electrical, Voltas. Maybe, I may say that Havells still is looking a little expensive, but maybe even that seemed to have bottomed out. So we are keeping positive on the stocks after this sector scene having went through the correction in this last 2-3 weeks.
Well, I don't know where this report is coming from, because on the ground there is much different. I mean, at least that's what we see. You go to any mall.
Some local circle poll.
I don't know. I mean, it looks far removed from reality. But for whatever it's worth, let's look at some of the IL&FS Group stocks. ITNL is up 20% right now. And there are a couple of other IL&FS Group stocks also looking quite interesting.
The interpretation could be NHAI has made the repayment. So is it that the government now realizes that this is a huge problem which is not getting the attention it deserves? It's
Exactly.
a 90,000 crore loan, of which about probably 50-60,000 crore is to banks, and the remaining are EPFO, about 8,000 crore. And, a whole host of others, mutual funds,
also
HNIs, and all of them. So, mutual funds are all widely held.
Yeah.
So there would be a pain point over there, and perhaps, the NHAI repayment also is because the government has put its head together, put heads together, and decided that this problem needs to be resolved. Yeah. In any case, one doesn't know if this outsized reaction will continue. It's only the first positive step.
Exactly. Let's take Mr. Tulsian's thoughts as well on this issue. Mr. Tulsian, your thoughts?
See, Anuj, in fact, if you see the structuring of ITNL, that is IL&FS Road Transport Network, in fact, that company was seen quite fragile and quite, unhealthy from the day one. I remember, at that time, in fact, we have always given caution. But when it used to rule from maybe at level of about 150, about 2-3 years back, fell to 100, fell to 80, in fact, the kind of business model was not seen sustainable. But yes, having corrected to the level of about 20-25, the situation is not going to be as bad, because the company is into the road assets network, and once they start getting there some kind of repayment, whether coming in from the government or from the other agencies, things will improve. But again, there is no point in taking any of the call in the IL&FS shares, whether it is IL&FS Investment Manager or it is ITNL, IL&FS Road Transport Network.
Okay, let's pay attention to the rupee because today the opening is extremely positive after days, several consecutive days of the currency falling. And now the year-to-date fall yesterday was about almost 15%. Ray Faris, Head Fixed Income Research and Economics at Asia Pacific at Credit Suisse, joins us on the phone line. Good morning, Ray. Thank you very much for taking this call. Well, we have seen the rupee fall along with emerging market currencies. On a year-to-date basis in Asia, it looks quite bad. Has it fallen enough for the ongoing emerging market turmoil to be factored in?
Well, I mean, I think a lot of that's going to depend on how this trade war with China, this U.S.-China trade war plays out, as well what happens with oil prices going further. So right now we have a very sort of unfortunate mix of the U.S.-China trade war escalating and potentially escalating further as President Trump announced overnight that the Chinese retaliation to the new U.S. tariffs may incur further tariffs from the U.S. And oil prices, as I'm sure you know, have pushed higher even as global metals prices have fallen. And that sort of implies weaker Asian export growth, but a higher Asian and Indian oil import bill. So right now the pressure is still very much on dollar India to rise. I would add that I think markets are disappointed by the fact that the government suggested late last week that it might take specific policy action to stem pressure on the rupee. But then as the weekend passed, we didn't really get anything that was particularly concrete. And I think that's disappointed markets, and that's some degree of concern that election concerns limit the government's willingness to take action to manage the currency.
Ray, hi, good morning. That was my next question. Do you expect the Finance Ministry or the RBI to come out with additional steps to support the rupee over the next few weeks? And if yes, what could those steps be?
Well, I think two things are likely. The first is that the RBI, I think, is likely to raise its policy rate again. Yes, inflation at the headline level has fallen, but core inflation, which has also come down, is still high, and I estimate it to be well above the RBI's target. The depreciation of the currency poses a credibility threat as well, and so the right thing to do is probably to increase rates again. The second thing that may come out, the government has talked about increasing tariffs on selected kind of luxury goods. One would imagine that they would increase tariffs as they've done in the past on gold and jewelry, possibly some other luxury goods. The bigger question is whether the government would be willing to do some sort of new external borrowing, another FCNR, or some other measures such as that to, raise capital inflows. As it stands right now, India is continuing to see foreign capital outflows, both from equities and bonds.
Well, yeah, we have been seeing foreign capital outflows for the last 18 months, I would think, but the reserves are also as good as about over $400 billion. Ray, at what point will you start buying India, for instance? I mean, rupee at 73, yields at 8.2%, stock markets down about 5% from their recent highs. Indian securities are a lot cheaper, whether you look at a share like TCS or you look at a 10-year Government of India bond. At what point does the combo become attractive for you?
Well, I don't want to make any particular statements about the attractiveness or the valuation of the underlying asset markets. I mean, what I would note is that real yields are not quite as high as they appear to be because the fall in headline inflation had a lot to do with food. Some of that's going to reverse in October because of minimum support prices. And as I said earlier, core inflation is running just below 5%. So real yields are not quite as high as the nominal yields suggest. From a currency valuation perspective, I think what's key here is the current account balance is continuing to widen out and the deficit. And if I look at the currency on a real effective exchange rate basis, it hasn't really fallen much. The Indonesian rupiah, for example, has fallen much more on a trade-weighted inflation-adjusted basis than the Indian rupee, and that's in part because Indian inflation is still fairly high. So from a pure currency valuation perspective, and crossing that over into the current account balance, especially where oil prices are, it's not clear that the currency is particularly cheap. It's not clear that it's very expensive, but it's not clear that it's obviously cheap.
Okay.
All right. Ray Ferris, thanks a lot for joining us today. That's the view on currency, of course. The pre-opening has ended, and it's ended quite okay. 47 points higher is what you have on the Nifty, about 0.5%. The Bank Nifty opening 90 points higher, slightly underperforming the Nifty. And of course, mid-cap starting well, 3:1 on advanced decline. Now, Ashwani, if we do open here, is there a trade?
Well, not buying for sure, but let's see. Let the market pull back a little bit, and then maybe post afternoon we can look for weakness and what happens later on. But any sort of pullback should be used to sell for the moment, and LIC Housing is a sell with a stop of 472, target of 450.
Okay. Well, we just have a few more minutes. Mr. Tulsian, thank you very much for joining us and staying with us through the pre-market. Just a few more technical questions to our technical experts. But before that, Manisha Gupta is here. Manisha, of course, we heard you out on sugar, but how are the commodity markets panning out?
Well, if you look at the metals, they are trading on the positive. So whether it's precious metals or base metals, they have opened Asia on a firmer note. Some pressure, of course, continues in for the crude oil prices, contradicting fundamentals at its best. On one side, of course, you have the US and China trade war escalating. And you also are looking at the US weekly inventories, perhaps build up by 1.29 million barrels. So that is something that will keep the crude prices in check. But on the other side, with the Saudi Arabia saying that they're comfortable at $80 and plus for Brent is something that has been supportive. It also has to do with the Iran sanctions, where we have seen the more exports going offline. And then, of course, it is the OPEC and the allies meeting on this Sunday, where they would be discussing further fundamentals. This actually is a prerequisite to the final meeting in December. So ahead of that, there would be some statements coming out on Sunday that would set course on where the crude prices are headed for the next week and the near term. So that is something that continues to support prices in Asia right now.
Hey, thanks a lot for that. Well, we have 2 more minutes to go before the market opens. Sun Pharma is actually the big mover in the Nifty on the back of the dermatology medicine getting an approval in Europe. It's up about 1.5% now. So Darshan, this space is something that you've liked for a while. If someone missed out on this rally or didn't pay any heed to your advice, you think it's still not too late to get into names like this?
It's very early. Please enter pharma in any way. Buy a mutual fund. There are sector pharma funds. Buy a collection of Cipla, Dr. Reddy, Oro Pharma and Sun Pharma. Enter now. It's just the beginning.
And is there a Nifty trade for you now if it opens 1/3% higher?
Yes. Wait for 10 minutes. I mean, that's a cooling off period. But then I would buy the Nifty. If it holds above 11,300, I would be a buyer.
Okay. At the moment, it looks that it would do so. Mitesh, anything that you would trade now after you see the pre-market rates?
See, I think pharma is a space which I like. So Biocon and Sun Pharma both are my favorites. I'll see how Sun Pharma intraday chart shape up after the opening, but Biocon would be an immediate buy as well.
Okay. Ashwini, are there any other shorts, especially in the finance space now? Because finance is the one that's rising at the moment.
See, everything in financials, including NBFC, PSU banks, they will face selling at higher levels. And what has changed? Rupees at 72.80, crude is at 79. So any sort of mild pullback will easily get sold into.
Okay. Yesterday you had, of course, the move in some of the FMCG names. That space is interesting. HDFC AMC, by the way, is opening 4% lower in pre-opening. And what's interesting is Reliance Capital is also down 3%, though now you have the mutual fund arm listed separately, the Reliance Nippon Asset Management Company. That stock also is now listed. So that one also would be in focus. So these are a couple of names.
We should look at ICICI Securities, maybe. I mean, I would assume that if the AMCs make less, they will pass on less commission. So the CLSA view is that companies like ICICI Securities, okay, minor downtick.
Yeah. Let's see the Reliance Nippon AMC as well. That also would be a stock to track along with HDFC AMC. So these would be some names.
Okay, well, that's the Nifty opening. So let's concentrate on the Nifty opening itself. The opening has come in the green as was the pre-market indication. 0.4 higher, 45 higher 11,322 now, 323. So that's the start, about 0.4 higher. Likewise for the Sensex, 150 up. That's again 0.4, 37,430 thereabouts. Bank Nifty is almost shoulder to shoulder as good, 100 points up on that index, 26,540. The mid caps actually outperforming for starters, but let's see how things pan out. HDFC AMC stock is the one that catches the eye, which is down 4%. Titan also actually starting well. Let me come back to the Nifty stocks now. Titan is starting, you know, with a 3% downtick now, nearly 4% downtick. Wipro as well, a little bit under pressure. HDFC is under pressure, about 0.5%. But that's the red list, HDFC Twins. Beyond that, actually, there is a bit of green on the stocks. Coal India up 2%. Hindalco, Sun Pharma again because of the news of the dermatology medicine. Metals are looking up. Tata Steel for one is up to 1.2%. Yes Bank up 1.2%. Eicher Motors, Tata Motors, DRL, BPCL. You know, the one feature of the rise today is that it's quite a medley of all sectors. It isn't one sector like pharma or IT is pulling it up. It's just across the board at this point in time. So, well, the headline has receded a bit after opening 0.4. It is now 0.25% up. It's coming close to the 11,300 mark. So, Sudarshan, if he was waiting for the cooling off, it is really cooling. Let's see if 11,300 holds, but we're getting better.
They're doing better. The index is up about 0.5%. The market breadth is good, almost 3:1 now in favor of the advances. But I'm going to start with the losers because, you know, that's the big story playing out, right? HDFC AMC is down 6.5% right now. Reliance Nippon Asset Management is down about 6%. CLSA put out a note where they said that the impact for HDFC AMC could be 25% on earnings and 17% impact for Reliance AMC in FY19 because of the cut in the equity AUM fees. So this is the whole pocket. Motilal Oswal is trading a bit in the red, not too much. Edelweiss is the only one that's bucking the trend. Titan is the other stock. I mean, you spoke about that. CLSA has come out with a big downgrade there. They've cut their target price quite a bit actually on Titan. It now stands at 720, so much lower than the current market price. Bank of Baroda is falling some more, so down about another 1% on Bank of Baroda. 17% gone this week, and some more consumption names under a bit of pressure. So, you know, names like Godrej Consumers, etc. have been coming off for the last few days. But that's the list of losers. The trend is on the upside for the mid-cap index itself. So let's talk about some of the gainers. Pharma stocks, Biocon is making you know, higher highs. Ajanta Pharma continues to move up. You have you know, mid-cap IT names like Cyient, etc. that are doing well. Some of the NBFCs like Muthoot Finance, not too bad. There's some news on Lupin's Tarapur plant as well, so keep an eye out on that. Otherwise, after the two-day fall, as you were saying, you know, there could be some amount of recovery today. We've seen that in the initial minutes, but do you reckon that this could get sold into?
Yeah, you know, even if it gets sold into, Sonia, perhaps from yesterday's low, there could be a bit of a bounce. I think the stock that I'm looking at right now is Bajaj Finance because that's a bit of a sentiment barometer of late, and that's had a at least the first bar is looking quite good on that one. That's opened with about 0.8% gap up. So that would be one stock that I would want to track for the day, purely because it's fallen so much. And at lower level, there is a bit of a buying which is emerging in this. But let me take it straight to Ashwani then. Ashwani, at these levels, is there a trade?
Well, dream on about the rally. This is not going to last 10 minutes. So, you know, you're already almost in the red. This is a time to get short on financials. And maybe 11,250 will come in sooner than we all expect. There's clearly a weak market. I mean, I can only see red on my screen and hardly, you know, 50-point rally on Bank Nifty, you know, not even 20 points on the Nifty. This is your time to get short. We'll worry about what happens in expiry, but I think within the first hour, you'll be fairly red.
Okay, well, I can't take my eye off the mutual fund stocks. Nomura has cut the Reliance Nippon price by 100 rupees. I mean, it's a 50% price cut. The original target price was 315. They've brought it down to 210. That's a steep downgrade. And likewise, Morgan Stanley's cut on HDFC AMC prices also from 2050 to 1765. So those stocks are clearly struggling with the new rules. But Titan, of course, takes the cake. Sudarshan, your 10 minutes is not up, But is there any stock that you're looking for a buy or a sell?
Yes, first for the Nifty. Nifty futures made a high of 11,350, and that's the point at which we want to go long. So the market needs to cross its morning high, and we would be long at that point. If it doesn't do that, we wait patiently.
Now
ITC is a buying opportunity.
Sorry.
I'm sorry?
I was going to say that now the cash Nifty has gone below 11,300 mark.
Yeah, we have to be patient. Now we are looking at the futures rate, which is much more reliable for the day. That's 11,350. When the futures crosses it, I'll be long. It will make a new high for the day. ITC is a buying opportunity.
Okay, well, the merger news is still a big overhang on the PSU banks. Dena Bank is now down 7%. You have Bank of Baroda down another 2.5%. In fact, the whole PSU banking mood has gotten soured post that news. Even something like SBI that's at least unaffected relatively, is down about 0.5%. Ashwini, how do you approach this space? I know we've spoken about it earlier, but any fresh shorting calls make sense here? And what would the big call for the day be?
Which space?
The PSU banks?
PSU banks have started a major downside yesterday, and whatever rally you had in the morning should have been used to sell, still remain short. The market is not really recovering, and you know, the recoveries happen once you have a 150-point gap up on Bank Nifty, 70 points. It scares the bear. This market is asking for the bear to beat it up. So big call is remain short on Bank Nifty. I don't think, you know, global cues are impacting us. And once 11,250 is gone, I think pressure will only mount.
Okay, well...
Mitesh, anything you want to comment on for a buy or a sell?
I think Lata, the easy trade, and that's shorting the PSU banking lot. OBC, Bank of India and Allahabad Bank come to my notice immediately.
All right, gentlemen, thanks a lot for taking us through the market opening. It's actually turning out to be a bit of a weak start because, and that would happen. The first gap up would get sold into on a day like today. The key would be to see if we defend 11,250 and from there if there's any rally. But the first gap up has been sold into. Pankaj Tibrewal, Senior Vice President and Fund Manager of Kotak Mutual Fund, is with us. Pankaj, good morning. Good to talk to you. Your thoughts on the kind of volatility that we have seen? We had a big rally in August, but almost entire gains have now been wiped out with this correction in September.
So good morning, Anuj. Good morning, Lata and Sonia. I think market is at a very interesting juncture today. And there is a tug of war going between the macro concerns and the micro improvement. And clearly at the moment, macro concerns are taking an upper hand. Clearly, if you look at our view over the next 6 to 8 months, we believe markets are likely to be volatile, led by the macro headwinds and the election, which probably would start somewhere from November, December on the state side and going up to the general election in 2019. At the best, markets could consolidate at these levels, and henceforth we believe that there is a merit to be cautious on overall markets. Valuations overall are not very cheap, and hence we believe volatility would be there in the next 6 to 8 months.
Okay. Pankaj, hi, good morning. The space to look at this morning is the entire mutual fund, the AMC basket, because SEBI has once again cut the mutual fund fees, and a lot of brokerages are talking about how the sectoral earnings could get impacted by at least 25% Your own thoughts on how to approach this space?
Sonia, we are a regulated entity and we respect any verdict by the regulator. However, we believe that if you look at from an overall growth perspective, this industry has a lot of leg from growth perspective. Today we are about 13% of GDP to AUM. Globally, if you look at it's about 60-65%. So we have a long way to cover out there. But any verdict by the regulator is most welcome, and we would take all steps to comply with it in the respectable time period.
Oh yes, but it would impact earnings significantly, wouldn't it?
So it would depend on how each of the AMCs take it forward from there, how much they absorb, how much they pass it on to the distribution. It would be really the strategy of each and every individual AMC probably we may not be able to comment at the moment right now.
No, but in the past, they have been able to pass on everything. How do you think it might pan out? I mean, you're also an investor and you could be holding other mutual funds in your portfolio. So how would you approach, say, an HDFC AMC or a Reliance Nippon? Some of the brokerages have cut their price targets very aggressively. For instance, Nomura on Reliance Nippon cut from 315 to 210. Likewise, HDFC AMC, an aggressive price cut coming from several brokerages. So how much can they pass on? 100%?
Lata, very difficult to say at the moment. It just happened last evening. The senior people of all the AMCs would have their own strategy for their respective AMCs. So it will not be right for me to comment anything right now.
Okay, no. So we'll just move on then. You know, we have been getting a couple of surveys as far as the discretionary demand or consumption is concerned. There are talks that the festive season could be under pressure. You know, spending could go down. You know, 40% say they won't spend anything at all. Would you be a bit cautious on some of these consumer durable names, some of the auto names ahead of the festive season, or you think it's going to be smooth this time?
Sonia, if you look at the overall consumption basket, I think staples have done extremely well, and so is discretionary over the last couple of years. And in our view, if you take a slightly longer term view, consumer discretionary is where we believe that as the per capita GDP increases, that basket is likely to see traction. In the near term, yes, with the fuel price rise, inflation a little coming back, people may cut on the discretionary part. But when you see a longer term 3 to 5 year horizon, I think we are at a very sweet spot. The AC penetration is still at 5-6%. The washing machine penetration is still in single digit. So I think there's a long runway for growth. But yes, in the near term, there could be some slowdown. Because the commodity inflation is back, prices have started to increase, and that could have some dent on the pockets of the consumer. Okay. And valuations obviously are not cheap in this sector.
Okay, Pankaj, NBFCs, you know, is the big move over now, well and truly over, or you think this is a good entry opportunity?
So, Anuj, if you remember, during various discussions, we have been cautious on the NBFC space. We believe that the NBFC which are more exposed to LAP, which is loan against property, are the ones to watch out for. Also, the cost of funds, because most of them are wholesale funded, are prone to rising interest rates. And also what we are seeing in some of the other NBFCs could have a bearing on the overall space per se in terms of cost of funds and liquidity. So we remain cautious on this space, and we are very selective on owning retail-oriented NBFCs only, where liability is good and asset quality is not an issue.
Okay. What about the old theme, Pankaj, housing? Before I come to housing in cement and construction, real estate seems to be getting a look in from several brokerages. Would you look at, you know, buying the distress there?
Clearly, Lata, if you look at this space, which is housing, I think this is one area where over the next 3 to 4 years, you would see massive consolidation. You look at the NCR region, apart from 1 or 2 serious players, the entire space is vacant. And our view is that over the next 3 to 4 years, there will be about 20 to 25 pan-India players. And post-RERA, I think the space has become tough for 1 or 2 kind of project builder kind of a community, and they are going to the larger corporate builders and asking for either a joint development or a JV. So I think this space will see massive consolidation over the next 3-4 years, and that's an opportunity we believe. We are started to look at this space more from a constructive angle, and we believe that 2 or 3 players can really create wealth in this space over a longer period of time. Also, if you look at from a cement demand, despite of real estate being down, has surprised everybody with the volume digit growth being in double digits. And if you slightly dig deeper into that, the Pradhan Mantri Awas Yojana has been a massive hit in rural areas. Last year we constructed about 44 lakh houses. That's not a small number. So in our view, cement and real estate as a combination could be wealth creating opportunities over the next 3 to 4 years. But we need to be very selective in the stocks we pick in both the sectors.
Big statement, Pankaj. Wealth creation in real estate stocks as well, because they have not made wealth for some time now.
Yeah, I think this is something that Kotak has been talking about for a while, the view on real estate. But I also wanted your thoughts on pharma, Pankaj, because, as we speak, the pharma space is topping the charts. Sun Pharma, Cipla, Dr. Reddy's all up about 1 to 2%. In most of the funds, you don't have too many pharma names. Have you missed out on this move, or have you consciously stayed away?
So in pharma, we believe that you have to be very stock specific. We don't believe that the generic price erosion is still over. And also people are kind of comparing pharma with what the run we saw in IT. But don't forget that when owning IT at the start of the year, the valuations were far more reasonable than what it is in pharma today. The entry multiples in pharma is not as cheap as it was in IT when we started the year. So we believe that you need to be very stock specific in pharma. Yes, rupee depreciation is a great tailwind for most of the pharma companies, as 60-70% of their revenues are exposed outside India and non-INR. But you need to keep multiples in mind before entering into this space. We have selective exposure to pharma in many of our funds and different pharma stocks. Some are exposed to the domestic market and some are exposed to the US generic market.
Okay. Generally, do you think the mid-cap space has completed its underperformance after that massive outperformance last year? Is it giving you a feeling that you can pick more winners in the mid-cap space than large-cap space for the next 12 months?
So Lata, till last year we were extremely cautious because the opportunities had shrunk and valuations had become very expensive. But if you look at this first 8 months, the small cap and mid cap indices have underperformed by almost 15 to 20% to large caps, and 40% of BSE 500 companies have corrected more than 20%. We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies. Opportunities have started to emerge on a bottom-up basis selectively, and we believe that over the next 6-8 months, if we build a great portfolio of good quality companies at the right price, I think over the next 2-3 years it could reap benefits for most of the investors.
Okay, Pankaj, thanks for being with us on the channel, and we will touch base with you once again very soon. That's Kotak talking about the mood in the market, which doesn't seem to be too bad. I mean, after 2 days of a big sell-off, there is finally some amount of sanity on the screen. We'll take a short break on that note. Up next, we'll head to the JP Morgan India Summit in New Delhi to chat with some important policy makers. Do stay tuned in.
This is TV18 and you're watching CNBC TV18.
Hi, Hi, welcome back to Bazaar Morning Call. For now, the equity markets have actually picked up a bit of pace. The Nifty is up about 30 odd points, as you can see, and it's led by a couple of pharma names. ONGC is also the one that's really topping the charts now, so 2% higher on ONGC. And a couple of other names like Coal India, etc. are doing pretty well. But the NBCC stock has lost 45% this year and is very close to its 52-week low following uncertainty in some of its key projects. Let's in fact get Anup Kumar Mittal, the chairman and MD of NBCC, who joins us now to talk about that. Mr. Mittal, thanks so much for joining us. If you can just start by telling us, what's happening with the Delhi projects. I mean, the High Court has ordered some of these projects to stop. What's the latest on that front, and how would all of this really impact your revenue stream, say, over the next 6 to 12 months?
You see, all these projects which are presently halted by High Court due to some NGT issue are approved by Cabinet, Government of India, and this is required, essential for the government employees' accommodation. So this is to be happen there. And next date of hearing is 4th or 3rd of October. And the court asked us to design the projects in such a way that minimum tree felling should be there. So we have submitted our revised design, and I hope by next date things should be clear, and I have no doubt that these projects will start very soon. So, of course, in last 3 months, since July onward, these projects are under hold. There will be some hit on revenue in this quarter, but we'll make up that revenue from the other projects which we have recently got, and we have expedited those projects also. So I don't think that whatever forecast we have given in this financial year, that will affect because of these projects. But certainly these projects will start, and government is very keen to do these projects.
Okay, good morning, Mr. Kumar, Mr. Mittal. Therefore, what can you guide us in terms of the revenues for the current quarter itself? We are almost through with this quarter, just about 10-12 days. Can it be as good as the first quarter when your revenue fell by about 20%, but you made about 1,800 crores? Is that the way the second quarter will pan out, or will it be a little more difficult? Will it be worse?
You see, second quarter will be better than first quarter, means there will be minimum 30% increase in revenue from the same quarter of a previous year. So quarter on quarter, year basis, this quarter will also show minimum 30% growth in the revenue. So similarly, profitability will also increase, and remaining financial year will also show you similar kind of growth.
Okay, so can you tell us what exactly is the order backlog at the moment? Where does it stand at, and how much are you expecting as an order inflow, say, over the next, say, 12 to 18 months?
You see, presently order book is about 85,000, and you are talking about 12 to 18 months. I am talking till March 2019. Okay. There are a number of projects which I'm sure by end of December or January will be through, and the value of these orders will be minimum 20,000 crore rupees, and mainly from the housing sector. Maybe affordable housing, from redevelopment of PSU properties. So there are several projects which are in a very aggressive manner in discussion with the client.
Okay. You took over HSCC, right? Is that going to add to your revenues in any fashion, and if yes, how much?
You see, this company is doing almost 1,500 crore rupees revenue every year. They have no debt company. This is zero debt company, and they have almost 200 crore rupees cash with them. And they do only project management consultancy in health sector like NBCC. Of course, their profit is not as attractive as of NBCC, 6-7%. They are making only 3% or 4%, and if I am not wrong, that is mainly because of some management issues or governance issues. When you are doing project management consultancy purely and no debt, so there is no reason to make more profit. So I'm sure that the revenue of 1,500 crore rupees will also increase, and definitely profit will also increase.
Okay, just one final question. You said that the Delhi projects that will be stopped by the High Court could impact earnings in the near term. What is the quantum of those projects, and how much could your earnings get impacted immediately?
I said that there will be definitely some impact on revenue because of halt of these projects, but there are some other projects which we have received recently. We will make up that, and the guidance which company has given initially in the financial year, that the revenue growth of 30 to 35% will be there in this financial year. Definitely we will maintain that.
Okay. When do you see the project execution picking up? Will it pick up in the third quarter?
Definitely, I have no doubt that all these projects will start in third quarter, and all other projects which are under tendering stage will also see the revenue booking in the third quarter or fourth quarter.
Okay, I also wanted to ask you, Mr. Mittal, you know, there are a lot of these stuck real estate projects, the JP projects and several unfinished Amrapali projects. There was a talk that you may be approached to complete those projects. What's the progress?
You see, the Honorable Supreme Court has called NBCC, and in last 2-3 hearings, they have, in last order, they have given the indication that NBCC will complete these projects, and we have already submitted our estimate of phase 1, that is 8,500 crore rupees, which is in media also, as well as in court orders. Since this is sub judice matter, that's why I'm very cautious telling you about this. But 8,500 crore rupees estimate we have given, and there are quite good amount of possibility that in next 2 or 3 hearings will take the shape, and these projects NBCC may start of Amrapali. That is related to Amrapali. As far as JP is concerned, JP is already NCLT, and still we have not discussed any thing on JP.
Okay. So you're saying that you will be roped in as a project management consultant, right? I mean, the charge of the companies will still remain with the current promoter. So NBCC will not is not keen to take over the companies. You're just going to be a project management consultant in this case.
Absolutely, NBCC will be the only project management consultant to get the project's construction completed, and we'll charge our fee, whatever we charge in other cases, and the amount will be provided by promoters or whatever way court decide. NBCC will not put any money, and NBCC will not take any legal and litigation responsibility with.
No, what do you make? What do you make, Mr. Mittal? NBCC as a company, say you said it's about 8,400 crore worth of projects. What would be your margin if you were asked to construct them?
You see, it's an open fact that in report submitted to court, which is circulated to others also, in 8,500 crore rupees, we have asked our fee of 10% in this case.
Okay. All right. We will look forward to hearing more about this. 2 or 3 years is what you said, Mr. Mittal. Thank you very much for joining us with all those details about your Delhi execution as well as the stuck projects at Amrapali. Well, let's shift back to markets and take a look at the spot where all the worry has started, the rupee. At the moment, extremely well behaved compared to its fall in the last hour of trade yesterday at 72.73 at this point in time, from 72.97 at close yesterday. My colleague Surabhi is at the JP Morgan India Investor Summit and has with her someone who has long tracked the rupee and other macros. Over to you, Surabhi.
Thank you very much for that, Lata. And Yes, good morning to all our viewers. We are coming to you live from the JP Morgan India Investor Summit 2018. The summit obviously comes at a very interesting time because macro issues are dominating headlines all over again, and we're wondering if some of these macros will start impacting the micros. So without any further ado, let me quickly get Jahangir's thoughts on everything that's going on. So Jahangir, the first question, the very simple one is this: 73 on the currency, 79.80 on oil. Are we at the doorsteps of a crisis? Are we okay? And with the government's reaction, these 5 measures, etc., and the talk of import curbs, will this sort of body language and reaction perhaps manifest a crisis that doesn't exist today?
Yeah, look, these things have a life of their own. But I would say that, look, there are much simpler solutions to these problems. There is much simpler explanation to where we are, why we are. But if we do not want to go with these simpler solutions and simpler explanations, instead we want to get tangled in the weeds with exports, imports, oil prices, we are going to come up with these kinds of very tangled solutions and tangled views. There is a very simple thing, and there is very little controversy about it. There are 2 reasons as to why the rupee is under pressure, like any other current account deficit. The current account deficit is rising, and global financial conditions have actually tightened through April till July. In August was very different. Then in August, emerging market risk was being reassessed. The question is, why did current account deficit rise? And rather than going to export, imports, exchange rates, oil prices, current account deficit is just the part of investment that domestic savings cannot fund. The problem is that we have seen not the problem, the good thing is that we've seen these 2 quarters of higher investment picking up, but there isn't sufficient savings domestically to fund that. So we are pushing them to go abroad to fund it, and that's where the problem is. So the question is, are the steps that are being taken addressing the problem of insufficient savings or not? And my point is that I don't think that's the way people, or that's the way policymakers are looking at it, and that's where I think you're getting tangled up in all of these things about export imports and everything else.
Okay, well, Jahangir, if I can squeeze a question in, do you think that at 73 sure. we are kind of, we have kind of discounted this trade gap? At 73, surely imports will get more expensive and therefore reduce. Exports could get a little more attractive. So at least have we started the trade deficit correction? And hence the currency fall.
Look,
Sorry.
Again, I'm going to go back to the original listing. I don't think this has to do very much with, how their trade numbers, etc., are going to react to the problem at hand. In terms of, what is the level, if you're going to think in terms of valuation, and valuation is the only way in which India is going to adjust, and India is not going to bring in other things, i.e. policies to help in the adjustment. We all know what happens if you have only one valve of adjustment. That variable adjustment is outsized. So my point is that, if you're only going to say that, well, FX is the only way in which India is going to adjust, and there is not going to be any support to FX in the form of tighter monetary, tighter fiscal policy, then the FX adjustment has to be higher or larger, could be, in order to get you to the valuation where people think India is attractive again. And I have no sense of that. Because the point I'm trying to make is that all of this adjustment that we're talking about is being focused only on a single variable. And if you have a single variable, single valve of adjustment, that adjustment necessarily all the time is very, very large. You really need to bring other variables to come and support that adjustment.
So Jahangir, in your book, how many more rate hikes should there be? Do you expect a 50 basis hike on October 5th?
We have a hike in October, we have a hike in December, and we've spoken about this right before. That look, if you really want, if you made up your mind, I don't know whether RBI has made up his mind or not, but suppose they have decided that they're going to hike in October 5th or 6th, whenever the policy date is, then it's much better to do that rate hike now in fact last week, in fact the week before that, then delay it till October. The effectiveness of that rate hike goes away, diminishes the longer that is delayed. And I don't see these artificial things about policy review October 5th, therefore I can't hike before October. Those are just, artificial restrictions. So if you're, I'm not so much worried about how many rate hikes as I'm worried about how quickly the rate hikes come in. Because the more you delay it, the larger the rate hikes always end up being.
Sure, that was the point you made the last time we spoke with you as well. Jahangir, hi, morning. This is Sonia here. You started by telling Surbhi that there are simpler solutions to the, to tackle the rupee issue. I know the FCNR route is not as simple a solution, but do you think that that's something that could come through? Because in 2013, the RBI had mobilized about $26 billion through the FCNR route, and it helped tackle the current account deficit and the rupee situation relatively. Do you think that we could see that play through this time?
Look, I know this has been going around quite a bit. I think people have forgotten what happened in 2013 completely. It wasn't that magically we had the FCNR being declared and magically everything turned out to be okay. Prior to going to the market with the FCNR, we did the following. Interest rates were hiked 300 basis points. Fiscal deficit was squeezed, I think, by about an annualized rate of 0.5% of GDP in the last 6 months of a pre-election year budget. Then we went with the FCNR proposals. And remember, the FCNR proposal also required a significant amount of subsidy coming from the Reserve Bank of India to Indian commercial banks and overseas banks with Indian branches to hedge their dollar exposure. So it wasn't that it happened magically. So if today we are going to say that, look, I'm going to start with the FCNR program or, some amount of, sovereign debt issuance, but I'm really not going to move on my monetary policy, I'm really not going to move on my fiscal policy, and all of that money is going to be a substitute for not moving on policy front, I don't think it is going to work out. And I don't think the world works that way. So I think even if we go down that route, we really have to put something on the policy front.
Jahangir, it's a bit unfair to say the government hasn't moved because the Prime Minister, no less, met on Saturday and reiterated that they're going to stick to the fiscal deficit target of 3.3. You don't believe that?
But no, I believe that they're going to stick to the 3.3 target, but central government hasn't been the problem. The problem has been the state government. The problem has been that every time the central government goes and consolidates, you might have a quibble with the amount of consolidation. I'm not disagreeing with that, but every time the central government in the last 4 years have consolidated, the state governments have gone and offset that. Now, if the state governments are not willing to play ball this time around by actually consolidating much more than they have done in the past, then I'm afraid that somebody has to be the adult in the room. And the adult in the room, unfortunately, happens to be the central government. So I'm not saying that I have no doubt that the 3.3% deficit target won't be met. It will be met. But my point is that that may not be enough if all of that effort is being offset by state governments going down their merry way of keeping on blowing up their budget deficit targets.
Jahangir, I have one question. Back to the rate hike issue.
Sure.
We're already at 8.2% on the yield. So I'm just trying to understand how another rate hike at this point is going to help.
Sure.
And beyond the rate hike, what are the other simple solutions that you spoke of that perhaps can deal with this?
So let's look at what has been the tightening in global financial conditions. The market has repriced Fed fund rate hikes significantly in April. Much more than the 50 basis points of rate hike we have delivered. That increase in Fed funds rate is still below the dots. So chances are that there will be a further increase in market repricing of the Fed fund rate.
So 2 more rate hikes this year from the
and 4 more next year. And all the 6 will have to be priced in. We have just moved 2. So the gap between our interest rate, what we are offering as returns, and what the funding rate is, has massively increased. And unless that gap is closed, you are still going to find pressure that there isn't enough returns by putting in money in India, because that gap between the returns that you get in holding a Government of India bond and the returns that you get in funding that thing has widened significantly, and we are not addressing that.
Okay.
So we have to address that.
Sure. Anything else you said? Other simpler measures?
No, by simpler measure, I said, you need to, if the government actually, or the policymakers, whoever it is, actually diagnoses the problem as a problem insufficient savings, they will find what the solutions are.
Okay, that's the conversation with Jahangir Aziz. But we need to focus back on the market now, because now there's a bit of a pickup from the lowest point. If you take a look at what's happening with the Nifty or the Nifty Bank, the Nifty is now 20 points in the green. It went into the red at one point. Same was the case with Bank Nifty, but both these indices are now, in fact, into the green. The Sensex as well, up about 75 points right now. Ashwini Gujral, Mitesh Thakkar and Sandeep Wagle with us. Ashwini, your thoughts on first hour? It's been rather volatile. How would you approach the rest of the day?
Well, now Bank Nifty is showing strength on the upside, because yesterday's low got defended on the Nifty, I think, as well as on the Bank Nifty. So now you could have your 50-70 point rally on the Nifty as well as Bank Nifty, particularly Bank Nifty, because now PSU banks are kind of tending to reverse and show short covering. Does it mean a whole lot longer term? I don't think so. It just means that an oversold market probably recover some of the short positions, and at higher levels again the short trade is likely to play out. We broke down certain levels yesterday. A retest of those levels may not be out of ordinary. So that way, today is going to be a narrow range day. You'll have bouts of buying and selling, and right now you're going through one bout of buying. So for the moment, Tata Elxsi is a buy with a stop of 1330, target of 1375. Titan is a sell with a stop of 815, target of 790. And Voltas is a sell with a stop of 580, target of 562.
Okay. Well, coming back to you with more questions, let's invite Ashwini Gujral and Sandeep as well. Mitesh, good morning to you again. What are you trading?
Good morning, Lata. So, 111,250 is kind of held on for the time being. So, I think I agree with Ashwini. It could be a more subdued day. But if you start breaking 11,250, you go short, or you go short closer to 11,350, 360 zones. So, for the time being, I have one buy and one sell. HCL Tech is a buy with a stop at 1,082 for targets of 1120, while ICICI Pru is a sell. Sell it below 348, keep a stop at 355 and look for 335 as the target.
Okay, by the way, Sonia, I just wanted to make a point. The currency is seeing a massive move right now on the way up. It's a big move. So once again, that 73 is where it stopped. And that's playing out in the PSU banks. Just pull out some of the PSU banks right now. Bank of Baroda is leading that move, of course. That one is now at the high points. That's Nifty PSU Bank up about 1/3 of 1%. Bank of Baroda is up about 1.3%. Canara Bank is the other one where you're seeing quite a bit of moves. So perhaps a lot of short covering is visible in some of these names after yesterday's big carnage.
Actually, most of the Asian currencies are in relative flat or slightly stronger terrain. Mostly flat. The Korean won has not moved, and that was where a lot of depreciation had started. The ringgit is flat. The rupiah is flat. I mean, it's down about 0.2. Not a great deal considering the kind of falls it has seen. And if you look at the Asian equity screen as well, there is a lot of consolidation and recovery. So, usually the markets at some point decide that the fall is enough. And maybe for the moment, that is a decision. It will have to be reiterated day after day before people forget the memory of the nasty fall of the last 3 or 4 weeks. But for the moment, both equities and currency screens in the Asian sector are showing a bit of recovery.
Also, just to take Anuj's point forward, the rupee weakness, the consistent weakness is having a positive rub-off impact on a lot of the pharma companies. So, because they're net exporters, as we know. Look at Cipla. It's hit a new high today. In fact, if you look at a 2-year chart of Cipla, it's broken out of that 2-year range. And now the market cap is almost approaching 50,000 crores, or 55,000 crores to be precise for Cipla. Sandeep Wagle also joins in. Sandeep, wanted your thoughts on the pharma names, Cipla, Divi's, all hitting new highs this morning, and anything else that you would be buying today?
Good morning, Sonia. I would be bullish on the pharma space. Biocon would be my top pick, followed by a Cipla. These are the two stocks I would be liking. Biocon, I have a stop loss of 682, target of 702. And I have one more call, which is a sell on Jet Airlines. I would sell it with a stop loss of 250. Any bounce back should be used to sell this stock. I have a maybe intraday or maybe one-day target of 220, and I won't be surprised if Jet goes below 200 over the next few days.
Okay, Ashwani, a word on these PSU banks. Just for the day, can there be some more short covering?
Well, these guys, they fell 8, 9, 7%. 1.5%, 2% is any day likely. And, you know, it depends on how the macros change. Oil comes off another 50 cents, rupee, falls off to 72.40, and things can start to look a bit different. So basically today is some kind of a pullback. Don't get overexcited, but a mild pullback is possible.
Okay, so what would your borders be? At what higher level would you be a seller? And at what, up to what lower level would you be a buyer? Say Nifty and Bank Nifty?
See, range is pretty much, on the downside. 11,280 is now looking safe for the day. And on the upside, 11,350, 370 could be the upside. On the Bank Nifty, again, the level that we broke down yesterday about, I think, 26, 680, 700, that seems to be coming in. Also because you have an expiry, etc. So that process may get help. But broadly, the last hour fall yesterday will tend to get recovered. But don't overstretch, because we know what happened yesterday in the last hour. So basically, 26, 680, 700. And on the upside, 11,350, 370 on the Nifty.
Okay, let's just also pull out the bond prices and see if there's any move on that, because this move on the PSU Bank Nifty is now quite big. So of course there's been the currency move, the fact that they were oversold, and now you're seeing, okay, that's the yield. 8.10 is what you have. That's a half percent lower tick.
No, absolutely. 8.16 yesterday.
8.16.
So substantial recovery.
So substantial recovery is what you're seeing right now. And sometimes of course these things turn on a dime, and that's what's perhaps is happening right now.
Bond markets always turn on a dime, because these days the volume is very low.
Yes.
But separately, I think there is a bit of stability in the currency for the moment, and that's rubbing off on equities for sure. Yeah. We don't know how long it will last. That 72.40 tried to hold for about 24 hours, but it gave way. Let's see whether now 72.60 will hold for the rupee. If it does, then we have a bout of stability, a period of stability perhaps for the equity markets as well. At the moment, it is still skittish. The mid-caps have lost some of their gains. It's flat. It started off with a 0.6 gain. We were 2 stocks in the green for 1 in the red earlier on in the morning. Now we are almost 1:1, maybe 1.2:1, thereabouts. So, things are still looking iffy, but for the moment, the green band has been defended. We take a break. On that note, we are coming back with the latest in the commodity space. Manisha Gupta back with us.
Care Ratings, enriching financial markets.
रेखा दी थोड़ी शक्कर। रेखा दी नहा रही है, पर मैं हूँ ना हल्दी हल्दी।
जिन दागों को आप नजरअंदाज करते हैं, दूसरों को सबसे पहले वही नजर आते हैं। इसलिए बर्जर इजी क्लीन पेंट, नो दाग, नो धब्बा, ओनली ब्यूटीफुल वॉल्स।
नया जॉब बड़ी कंपनी में, हो गई तरक्की।
तरक्की वो जब बड़ी कंपनीज भी तेरे लिए काम करें, वो नहीं जब सिर्फ तू बड़ी कंपनी के लिए काम करे।
इन्वेस्ट करें ICICI प्रूडेंशियल ब्लू चिप फंड में और देश की बड़ी कंपनीज में निवेश करने का मौका पाएं। तरक्की करें। Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
कौन सा फ्लोर?
Italian marble.
Oh no, flat.
3 BHK है मैम।
घर बेचने का भूत सवार, लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायर्स।
आने वाला
कल सुनहरा हो, समझो हो गया। बजाज एलियांज लाइफ गोल्ड प्लान के एक्सपीरियंस्ड इन्वेस्टमेंट मैनेजमेंट का साथ हो तो आप बस लाइफ गोल्ड प्लान करो। बजाज एलियांज life.com पर लॉग ऑन करो या हमारे इंश्योरेंस कंसल्टेंट से बात करो और बाकी समझो हो गया। बजट पेंटिंग आई ऑटोमेटिक मशीन के साथ, यूं शुरू यूं खत्म। पेंटिंग का T20 बजट एक्सप्रेस पेंटिंग।
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Welcome back. There is a spot of bother on the mid-cap space, but the Nifty and the Bank Nifty are holding up, and we will take that with both hands. More importantly, the currency is holding up, despite the fact that now Brent has crossed 79. So on that note, let's invite our commodities editor, Manisha. Crude climbing up again, inching up?
Oh, well, yes, it is. Steady to flat is the best that you can call it right now, but at least we've given up the early losses that Asia started with. It really has to do about the contradicting fundamentals. On one side, of course, the markets will react near term to the US weekly inventories on what they come out as. But then the longer or the, broader picture is about supply concerns arising out of Iran, also from various OPEC countries. And with the OPEC and allies meeting this Sunday and deciding future course of action on how the output cuts would continue is something that continues to support the prices. So flat in the international markets, but 0.25% higher in the Indian markets is how we are trading here. Also, the Saudi Arabia statement saying that they are comfortable with prices at 80 and above as well in the near term, as you continue to see supply tightening for the rest of 2018 will continue to add premium to those prices. The important thing is that while the US crude is trading at 70, you have the Brent trading at 79. So it nearly is a $10 of a gap that we are seeing for both the varieties, and that just makes the US crude more lucrative for the international markets. That is something to keep an eye on as well. Well, the US dollar hasn't been able to hold on, even as we have seen the US-China trade concerns just continue to escalate. We actually have seen the US dollar decline, and that is supportive for the precious metal prices. So buying in the global markets, it's nearly up by 0.5% for the silver as well in the global markets. And you can see that being mirrored in the Indian markets on your screens. Good buying continues in the physical markets in India, and you can see that impact on prices also. Even as the US-China trade concerns are on, we are looking at more statements coming in from both sides and retaliation, etc. The ground point is that the Chinese data has been positive. If you look at the housing prices in China, they are the best in last 2 years. China has been consistently talking about pushing infrastructure, and the ground demand is strong. Many of these metals are in deficit. With the winter output curves coming in for China, that's yet another thing that the markets are watching out for. Steel prices have continued to gain up for a third straight day in China, and that clearly is spilling over for the base metal prices also. So 0.5% to more than a percentage point of gains is what you can see across board in all of those industrial metals. It is buying strategies then from the brokerage houses as well. We spoke to Kedia Commodities. They have a buy in crude. 5,100 is the target for today. They also have a buying in case of natural gas prices with targets of 213 at thereabouts for the day.
Okay, I think you are bullish on crude, Manisha. Ever since you stepped in, crude has been climbing up.
It is expected to go up. Fundamentals are supportive as well.
All right, Manisha, thanks a lot for that. Well, I just want to point out that the up move in crude is having a really bad effect on aviation stocks. Sudden slide is what you're seeing in Jet Airways. It's down 5% right now, and all this in just a matter of minutes. I mean, of course, it's not new to Jet Airways to slide like this. This year, it's lost almost 71% of its market cap, and now at new lows for Jet Airways. But keep an eye out on the markets. Mid-caps have actually moved into the red, a tad bit, down about 15 odd points. But REC is a stock on our radar right now. The company has posted a 37% jump in the Q1 net profits on higher revenues and lower impairments. PV Ramesh, the chairman and managing director of REC, joins us now to talk about that. Mr. Ramesh, the profits in Q1 was boosted by an other income of almost 600 crores. Can you tell us what is the nature of this income, and will it, be recurring in nature?
Effective 1st of April this year, we had to switch over to the India accounting standards. And this also includes the swap accruals. So this 560 odd crores really is has come from the depreciation of the rupee. So we have 85% of our external commercial borrowings have been hedged, and so that hedge accounts for this income. So it's because essentially on account of the rupee depreciation during the first quarter, which continues this quarter as well.
Oh, I see. Okay, Mr. Ramesh, your company posted a NIM of 3.72%. The spreads are also squeezed. I mean, the NIM is lower than the quarter ago. Spreads are squeezed at 3%. With interest rates rising, and of course the rupee also weakening, will you see further pressure on your spreads?
There's been some pressure on both the NIMs and the yields. However, we still remain well above our peers in the market. Our yields are more than 3% and NIMs are in the up closer to the 4s. I mean, and the cost of borrowing is going up both in the domestic market and in the international market. Nevertheless, we have tried to keep our borrowing cost low. As you can see, in the first quarter borrowings, our average cost was 7.25%. We will continue to work accordingly to tactically manage our borrowings. However, it is inevitable in the current regime. We will have to pass on some of this to our clients. Accordingly, we will align ourselves with the markets and continue to see we will remain our yields around 3%.
So the gross NPAs are up at 8.12% now versus 7.1% earlier. You know, it's escalated quite a bit. Where is the pain in the portfolio and how much more pain remains to be fully recognized?
We have adopted the new mechanism that is prescribed under Indian accounting standards. We had the Fitch credit rating agency actually do a credit risk estimation and determine a fair value of all the assets, and this is based on that. We have actually determined the credit impaired asset value, and accordingly we have made a provisioning almost to the tune of 50%, I mean 47.5%, and we have made an aggressive provisioning for some of the assets, and they vary from an asset to asset, but an averaging out to be about 50%. So we have really, I mean, we believe that quite a few of these assets are likely to be resolved in the near future. We are working with our other lenders in finding an optimal resolution. This should happen very quickly, either pre-NCLT or intra-NCLT. We would like to believe that there would be no further pain. I mean, it is actually likely to be positive from now onwards, where some of the projects are likely to reverse in the coming days.
But the power assets that have gone, that are likely to go to NCLT if the Supreme Court doesn't renew its status quo, would be as high as 1.8 lakh crore. And, you know, despite the Parivartan that you have recommended and the Samadhan that SBI has recommended, just give us an idea how much of haircuts the lenders will have to take on these power assets.
That's a difficult proposition to say because, I mean, if you scan the horizon of the stressed assets, I mean, that is across the gas, coal, hydro, I mean, there's almost maybe approximately, I mean, this is just a ballpark figure, about 60,000 megawatts, and they could be divided into three broad segments. The one segment of those are which are irretrievable. They are at a very initial stage of completion, so they are not worth anything other than scrap and the real estate. So that is almost about 1/3, and about 1/3 of them are really commissioned, completed projects with FSA, PPA, however, are suboptimal in their revenue yields, not able to service the debts. And these have a market, ready market. I mean, they don't need to go anywhere. I mean, that is the process that the financial institutions are now currently engaged with. The third bucket are those which do not have either an FSA or a PPA or both. And these are the ones which are completed or close to completion, almost 80% completed. And these are all good, viable assets otherwise, if only they had somebody to buy the power, somebody to supply the fuel. So it is those which could be warehoused and managed in the warehouse. So we would foresee about 10 to 15,000 megawatts is what perhaps an institution like Parivartan could finally end up managing, provided the lenders, of course, see this as a viable proposition.
Is there any reform on the distribution side expected to make power generation, the business viable over the next, say, 12 to 18 months?
The DISCOMs are modernizing, and they are modernizing very fast, both in terms of not just the infrastructure investment or electrifying villages and households, but really in terms of their operational efficiency, their methodologies, and their ability to reduce the cost of power, reduce AT&C losses. I mean, we see very clearly in the last 2 years, the gap between the cost of purchase of power and cost of supply has come down from 56 paisa to 20 paise, and in some DISCOMs it's come down to 0. AT&C losses are down to 18% at an aggregate level from the earlier 23%. And you could see that several of the DISCOMs have now become profitable. I mean, I'm just sitting in Mumbai, where the Maharashtra DISCOM has declared a profit of more than 600 crores. So we are seeing a concerted effort for the first time by the DISCOMs, by the state governments, by the Government of India to come together to modernize the distribution network, recognizing that the distribution had been the weakest link in the power spectrum. And with this electrification of 4 crore households impacting the lives of 25 crore citizens of this country, this is a transformational movement, and I'm sure we will all seize this opportunity for a much major transformation in the rural areas.
Yeah, but those 4 crore households have to pay, no, Mr. Ramesh. That is the whole problem. The new electrification is for areas where perhaps they won't be able to pay. But in any case, let me wind up the conversation with just a question on this talks on the Mundra project that's happening, the high-level committee of Mr. Pramod Dev and a High Court judge, as well as Mr. Mundra. The draft report of that committee is also out in some websites. What is your sense? Do you expect an early solution? Can you update us on that project and its resolution?
I'm sure that would be the case. Earlier we had consultations with Gujarat government just to help them out, and they are proactively taking measures, and I'm sure there would be a sustainable resolution to these issues, and which is for good of everyone. I mean, we need power, we need quality power, we need to give 24/7 power to every citizen.
Okay, all right, Mr. Ramesh, thanks a lot for joining us and talking about the business as well as the power generation space. For now, the market is still where it was before we started the discussion. Mildly in the green for the Sensex and the Nifty, and flat for the mid-cap index. We take a break on that note. On the other side of the break, it's back to the Morgan Summit. Our colleague Surabhi is there in Delhi. She'll be chatting. She is chatting, in fact, with Viju George, the JP Morgan IT analyst. So we'll find out more about that on the other side of the break. Stay tuned.
CARE Ratings, celebrating 25 years of analytical excellence.
बर्जर एक्सप्रेस पेंटिंग कराइए पेंटिंग का T20 ऑटोमेटिक मशीन्स के साथ यूं शुरू यूं खत्म बर्जर एक्सप्रेस पेंटिंग वाह
अरे मैडम एक भी कील नहीं पर
ना 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 एक कील ना 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 प्लीज एक कील जस्ट अ कील ना 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 ला 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 ना ना ना
निखिल साहब टाल मटोल छोड़ो टाटा कैपिटल से रिश्ता जोड़ो
टाटा कैपिटल
क्योंकि क्विक होम लोन्स के लिए भरोसे का एक ही नाम the all-new Toyota Yaris. All sense, all sedan.
इंडिया तो रोज बनेगा और रोज धूल भी उड़ेगी, इसलिए
बर्जर एंटी डस्ट पेंट, डस्ट गार्ड टेक्नोलॉजी जो धूल को दीवारों पे टिकने ही ना दे।
धूल आए पर घर पे ना टिक पाए।
MRF ZLX. Comfort made more comfortable.
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Nice house, Kumar. So nice. ये रसगुल्ले इतना मत खा, नहीं तो मेरे जैसा फुटबॉल बन जाएगा।
हमें फुटबॉल बुला रहा है। जिन दागों को आप नजरअंदाज करते हैं, दूसरों को सबसे पहले वही नजर आते हैं। इसलिए बॉज इजी क्लीन पेंट, नो दाग, नो धब्बा, ओनली ब्यूटीफुल वॉल्स।
Welcome back. Well, as we wind down on Bazaar, the markets have maintained the green tick. They've maintained Nifty above 11,300 and the Sensex has held on reasonably well for about 0.25% higher. It's the Nifty Bank which has done even better and that's because of the fall that we are seeing in bond yields, now at 8.1 compared to a high of 8.16 they saw yesterday. So it does look like today the bulls are getting a look in, but let's see whether the bear brigade beats them back. For the moment, before we wind on Bazaar, let me hand it over again to Surabhi Upadhyay, who is waiting at the sidelines of the JP Morgan Investor Summit, and she has with her Viju George, their IT expert. Over to you, Surabhi.
Thank you very much for that, Lata. Yes, IT is really the buzzword because we're all looking for beneficiaries of this massive rupee depreciation. That's really the talk point in India. Viju George is the man who tracks the sector. So, Viju, you know, I want to sort of get your understanding, and I was looking at your earlier note as well. I think the thumb rule is that with every 1% depreciation in the Indian currency, companies should benefit, I mean, in terms of EPS, anywhere between 1% to 1.5%. Would that be right? But within this big IT universe, who are the ones that will benefit the most at the moment with this currency tailwind?
Sure. Thank you, Surabhi, for having me. So you're right, the rupee has come at a great time for the sector. And I think also what adds to the joy or cheer this time around is that unlike in 2013, the growth rate also seems to be picking up. You know, and we're hearing more positive commentary on demand from most companies, if not all. Now coming specifically to your question, you know, yes, the rupee rule of thumb is 1% change the rupee dollar would give you a 1 to 1.5% at the bottom end for some of the larger companies. For some of the smaller companies, though, it could be even higher. It could be upwards of 1.5%, particularly if they have lower margins on a far more offshore-centric cost structure like Mindtree or names like that. So this 1 to 1.5% is a good buzzword. I mean, it's a good rule of thumb for the larger tier companies. Within that, you may not see it entirely translating because a lot depends on the hedged positions. So you look at for those companies that you think are relatively less hedged. In that context, I think Infosys, Mindtree, etc., some of the companies which are relatively less hedged compared to their size.
So they benefit.
So they will they will benefit probably a little bit more and show you a little bit more of that EPS upside. You know, at least in the near term. And considering that the rupee has depreciated by almost 12%, you know, since March, that we've been keeping the track of data, my sense is that you should see 15 to 18% flow through on impact on EPS, at least for the coming couple of quarters.
Okay, so that's straight away a windfall gain that's coming by way of these companies. But let me ask you this: when such a big windfall gain is happening, clients are also very smart, right? Especially when newer contracts are being negotiated. Do you expect there'll be a bit of tough pricing negotiation because of the factor that the rupee has become a tailwind for these companies?
So Surabhi, I think clients are not just the determining factor in this equation. I think competitiveness also ensures that.
Absolutely. Yeah.
So I just sort of hark back to 2013 when we saw the rupee during the taper tantrums. depreciate very sharply from 54 to 69 in a matter of 3-4 months, and stabilized at 62, 63 very quickly thereafter. So for 2 to 3 quarters, companies did show it through the margins, but it substantially dissipated within 12 months from there.
Okay.
So what really happened in this case, I think, is that whether clients led to the pricing renegotiation or whether competitiveness just ensured that. So companies themselves taken upon themselves, because if they don't, the competitors might do it and take away deals. So my sense is that yes, you will see it being passed, the benefits being passed on to clients. They may not necessarily ask for it, but competitiveness ensures that.
So is that being reflected in stock prices? That's the next question, because this massive rupee rally that we've seen, especially towards the tail end, I think some of it was factoring in this currency gain. Is there a risk to the rupee rally given how elevated valuations are in the sector now?
So I think it depends on whether demand can improve to the extent to offset that concern. But if you assume that the demand is improving only by a couple of percentage points at best, and that does not sustain or improve further as we go next year, then I think what you're saying is right, because if the rupee starts to find a level and stabilizes around that level, in the near term you will have great flow through to EPS. But as you start passing that to clients and to your employees, you will start to see it getting reflected in margins next year onwards. So potentially margins next year could be lower than this year, which the stocks are not pricing in unless the demand improves materially.
That is a big, big headline, and that's exactly the kind of forward-looking sort of understanding that we need. So you're saying FY20 could actually be a year of slight margin compression as competitive intensity picks up to sort of also negotiate with clients on the currency impact. What is the expectation on demand for this year and going into next year? And then, I'm building to the basic question that, are we close to the IT rally?
So I think,
are we close to the top of the IT rally?
No, I don't think we are close to the top of the IT rally. If you tell me that the rupee is going to stabilize to 72 here, and you tell me that demand is not improving from here noticeably, then maybe we'll be close to the IT rally. So what I would probably see is watch for where the rupee might stabilize. For all it may still stabilize at 74, 75. I'm just assuming that could be a possibility. Then the stocks run further from here, right? But assuming that demand is picking up now, but if that pickup is not sustained through CY19 or FY20, then I think some of the valuations that we're seeing right now in the sector might appear to be full.
The consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%.
It'll definitely disburse some market share from some of the existing players, some of the large players to the small players.
Over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies.
There will be minimum 30% increase in revenue from the same quarter of a previous year.
Then it's much better to do that rate hike now, in fact last week, in fact the week before that, than delay it till October.
Some pressure on both the NIMs and the yields. However, we still remain well above our peers in the market.
कुछ लोग बहुत कुछ हासिल करना चाहते हैं और ये कुछ लोग जिंदगी से बेहतर चाहते हैं और अब क्या कहें, लेकिन जो बढ़ना चाहते हैं वो सेविंग्स अकाउंट पे 6% इंटरेस्ट को कहेंगे यस। यस बैंक इंडिया बोले यस।
ये रसगुल्ले इतना मत खा, नहीं तो मेरे जैसा फुटबॉल बन जाएगा।
फुटबॉल बुला रहा है। जिन दागों को आप नजरअंदाज करते हैं, दूसरों को सबसे पहले वही नजर आते हैं। इसलिए बॉज इजी क्लीन पेंट, नो दाग, नो धब्बा, ओनली ब्यूटीफुल वॉल्स।
शोल्डर 18। पॉकेट कौन सी साइड?
साउथ वेस्ट फेसिंग।
साउथ वेस्ट। ओह नो, फ्लैट।
3 BHK है मैम।
घर बेचने का भूत सवार, लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायर्स।
Toys. That's what they all seem like. Trying to race with you. Trying hard to be you. They watch you, copy you, and pretend to be you. But you know, and deep down they all know, they can never be you. Forget the toys. Honda City, worlds ahead.
is never simple, but dig for truth, we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC TV 18. This is TV 18 and you're watching CNBC TV 18.
Chartbusters brought to you by BMW and Bajaj Allianz Life Insurance.
A very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks of the day. Yesterday, we ended virtually at the low point of the day. This morning, good to see the bulls fight back. The Nifty is holding with a gain of close around 40 points. And importantly, the rupee as well has bounced back a tad bit, holding at around 72.5 odd. So bounce back in the equity markets and a bit of a fight being put in, even in the currency space. So pretty good going. The bulls, they'll be looking at around that 11,200, 11,250 odd mark and trying to defend that level. Here, Yuma, markets are looking good. And on Chartbusters today, our director, Yash, it's his birthday. So Yash is wishing you a very, very happy birthday. And great that you're part of this team as well.
Yes, absolutely. And all the best. Wish you, many happy returns of the day from everyone from the Chartbusters team. But, back to the markets.
Around that 11,200, 11,250 odd mark.
Compared to 3 p.m. yesterday, at that time, crude was hovering close to $80 per barrel. Now we're closer to 79. The rupee is appreciated, and even the global equity markets have put in a rally, not just in US, but if you pull up the Asian market picture as well, you've seen a rally coming through in the, the Nikkei market on the back of Bank of Japan remaining pat on their interest rates. The economic policy continues to remain stable. Hang Seng has put in a 260-point rally. So compared to 3 p.m. last night, yesterday, when the slide started in the equity markets, today, at least on the macro factors and on the global equity front, the parameters appear to be better. And actually, as we speak, there is such a big up move in the market.
Absolutely, Rima. And, I don't know whether there's a big move in crude prices or there's some change in terms of policy, but HPCL, BPCL and IOC, massive volumes on all those three stocks. They have moved to the high point of the day. Just pull up the intraday chart out there. All those stocks are moving well. Titan, that stock was down close to 3% at the start of trade. That as well has moved higher. And the sense you got, Rima, at the end of yesterday was that, in fact, though the Nifty ended at the low point of the day, the premium on the Nifty futures, that didn't contract. So that was one factor. At the end of the day, we learned that the FIs, they bought 10,000 long contracts on the index futures, telling you there were some contra-long positions that were taken. Now that we're holding with a gain of around 50 points, it'll be interesting to see whether or not we see some unbinding of those positions, or in fact, there are more long positions being taken, more amount of put writing as well. If you can pull up a strike, 11,300 put, that's the most active today. So just keep an eye out on that mark. Close to around 4.5 lakh shares being added out there. Premium of around 60 rupees, telling you the 11,250, 11,240, that's a very, very crucial mark for the bulls, and they'll be looking to defend that mark. 11,300 put, that's the level that we're talking about. But let's kickstart the show with the top stories.
Yes, absolutely. So let's take it away to Titan, which is among the top Nifty losers, though as we speak, that too is staging a bit of a recovery. CLSA has downgraded the stock to a sell, lowered the target price to 720.
And asset management companies are real under pressure after SEBI announces a cut in total expense ratio for mutual funds. CLSA says the cut could lead to a 15 to around 25 basis points reduction in equity fees.
Yes, absolutely. So let's take it away to Titan, which is among the Sun Pharma gets a boost as the dermatology medicine gets an approval in Europe. Rollout of medication in Europe will start in the next 2 weeks.
And sugar stocks surge in trade. Sources say that the cabinet may approve a subsidy on sugar exports. The proposal is to give a subsidy on exports of around 50 lakh tons of sugar at a price of 13.88 per quintal.
RITES Gains in Trade receives an additional turnkey contract worth 436 crore rupees from the Indian Railways.
Okay, Bank of Baroda's bounced back in today's trading session. It was down 15% yesterday. Today, from the low point of the day, it's bounced back and it's holding with a gain of around, that 3.5–4% odd. But as I said earlier, 11,300 put. Keep an eye out on that mark. If you see more addition from here, telling you the bulls, they believe they can defend that. If you see some unwinding of those positions, that will be telling you that they're getting a little bit nervous. So the 11,300 put. Great work by the birthday boy Yash. They're seeing a lot of addition in today's trading session. How do you trade the Nifty though from here? Is this a shorting opportunity, this bounce that we're seeing? Or in fact, could we see a bit of a short squeeze and the market's moving higher? Ashwini Gujral's with us. Hi Ashwini, good morning. What's the trade on the Nifty? If you see more addition from here,
well, as long as the rupee keeps appreciating, crude remains in control, I think the market is poised for some short covering. And the interesting thing is that stocks which got beat up yesterday, Bank of Baroda, Axis Bank, Canara Bank, they are showing some amount of action on the upside. And plus, you have metals which is performing. Overall, today looks like a day when, bulls are taking it off. But I think 11,350, 370 will be difficult levels to get beyond. The Bank Nifty had a particularly severe fall, so maybe 26, 680, 700. That seems like be a place where this rally could go. But still, you shouldn't get all bullish and gung ho because this remains a bit of a pullback rally for the moment. Only if we start crossing, say 11,400 for the moment, would you think that the worst is over and we should be moving up from here. For the moment, you should probably play only for a recovery. Having said that, TCS is a buy with a stop of 2070, target of 2120. Tata Steel is a buy with a stop of 620, target of 638. And Bank of Baroda is a buy with a stop of 114, target of 122.
Okay, thank you very much for that. And I just spoke about how oil marketing companies are staging a bit of a comeback. Two other pockets which are moving higher. One is power. So you've got NTPC in the large cap space. In the mid cap space, you've got Torrent Power, Adani Power also inching higher. So the intraday should be up for you on your screen. In fact, Tata Power too is higher by close to about 3% So mid caps and large caps in the power space are looking quite good. And apart from that, paper stocks. So JK Paper is now locked in an upper circuit of close to about 10%, while Orient Paper and Industries too is up nearly about 5%. So in the broader markets, that space too is seeing some amount of interest. Some news coming in on Punj Lloyd. The stock is reacting positively. This is with respect to insolvency proceedings which were initiated against Punj Lloyd, and now that case has been deferred to the 19th of November. We'll get you some market opinion now. Earlier we spoke to Sunil Garg, the head of international equity research at JP Morgan, from the sidelines of their India Investor Summit currently underway in New Delhi, and the performance of emerging markets as well as the outlook for the Indian markets.
We've lowered our estimates in terms of target price for MSCI Emerging Market Index and also some of the EPS numbers. But the fact remains that emerging markets are very cheap, and in fact they're trading at a much wider discount to historical averages, and that at least provides a value floor in emerging markets. So overall we are positive. I think the big driver here, it's going to be China, because China has been a massive underperformer. So it's not just some of the Latin American currencies that have been weak, but it's China's equity market that has been dragging down EM performance. Very cheap, and in fact we've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. If you look at some of the high frequency data points coming through, whether it's PMI, whether it's rainfall, whether it's the pressures from oil prices, I think these are going to be acting as headwinds, and we think the consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%. We actually think that higher bond yields are a sign of confidence and typically, historically, and particularly in developed markets, they've been associated with better equity markets rather than the other way around. Overall, emerging market positioning at the moment is light. And I think India is, as I again mentioned earlier, has been one of the stronger outperformers. So, you know, there's clearly a possibility that as investors get more comfortable with emerging markets, it rotates into markets that have massively underperformed.
Well, keep an eye out on some of these paper stocks. Rima was just telling us that, in fact, some of those stocks are moving higher. JK Paper, you have Orient Paper as well that are moving higher. A couple of factors playing out. One is the ban on plastics. Second factor is that, in fact, there are production cuts in China. So that's what's helping domestic paper companies. And not just that, I was reading an article. The domestic AMCs, they have increased their exposure to paper companies on the whole. And that's what's leading, you know, the street to get very, very buoyant in terms of these companies. They've all moved to the high point of the day. But let's address that news on Punj Lloyd. Ashmit Kumar joins in to fill us in with that news. Ashmit.
Well, it's the Delhi High Court essentially reiterating the orders of the Apex Court that there needs to be a status quo, but towards that end, spelling it out in as many words. As far as Punj Lloyd is concerned, no IBC proceedings can be sought to be initiated against them. As far as they're concerned, there is a status quo that has been clearly spelled out now by the Delhi High Court with respect to any potential IBC proceedings against the company. Now, keep in mind a couple of facts. First, the Apex Court just earlier this month had in fact passed orders whereby they had passed a stay order on the February 12th RBI circular. The RBI circular was the one that had given a 180-day window to banks to settle stressed assets, or else had given them directions to move them to the NCLT under IBC. Now, since that had been stayed, the Delhi High Court here observed that the Supreme Court has already seized the matter, and hence it wouldn't be appropriate for the Delhi High Court to pass any further orders except to reiterate the status quo. So to that end, definite relief coming in for Punj Lloyd. No IBC proceedings can be initiated against them. Of course, as far as why they were here before the Delhi High Court, that's because ICICI Bank, acting under the February 12th circular, had been contemplating possible IBC proceedings. So towards that end, some clarity coming in for Punj Lloyd. But of course, the final word will have to be had by the Apex Court when the hearing resumes later this month. Back to you.
Okay, thank you very much for that. The relief is evident in the stock price of Punj Lloyd, now higher by 5%. Get into a break. Waterbase is a stock which is on our radar on the back of promoter hiking stake. Let's get chatting with the management, the CEO of the company, Mr. Akula, on the other side.
By analyzing data through Hitachi's IoT platform, we can predict what comes next and help cities run more smoothly so that everyone can move toward what matters. The future is open to suggestions. This is social innovation. Hitachi, inspire the next.
Smooth ride and agile handling. Quietest cabin at 43 decibels. Finely crafted interiors. Easy to step into. Smooth as a shark. Silent as a shark. Marazzo.
ये फ्रिज देख, शादी के टाइम दिया था तूने। देख कैसे चमका के रखा है।
ये चमक रहा है क्योंकि इस पे नेरोलैक का पेंट लगा है।
मेरे फ्रिज पे नेरोलैक।
मेरे फ्रिज पे नेरोलैक। मेरे फ्रिज पे नेरोलैक।
चमका, चमका। तो अब घर भी चमका लो।
इंडिया के ज्यादातर होम अप्लायंसेस पर लगता है नेरोलैक पेंट, जिसकी चमक रहे सालों साल।
यार चमकाया।
आप कब चमका रहे हैं अपना घर नेरोलैक से?
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Welcome back. The company which is on our radar right now is Waterbase. If you pull up the performance of the stock in the last 3 days, you can see higher volumes as well as increased traction. In fact, this week itself, the stock has seen a rally of close to about 15%, and this is on the back of promoter hiking stake in the company. Ramakant Akula, the CEO of the company, joins in now. Mr. Akula, if you could tell us, so far in the quarter, in July, August, as well as half of September, by how much of the promoters hike stake in the company, and are you aware of their plans to hike some more, buy some more stake?
I mean, this information I would rather leave it to the promoter to answer. And to my knowledge, it's about 50,000 shares have been brought in the last 3 days. So the stake would have gone up by at least 0.2-0.25% in this quarter.
Okay.
All right. Is business looking positive? Your first quarter was good. You saw a revenue growth of around 20% approximately. For the year, what kind of revenue are we looking at? And importantly, what is your capacity utilization? What was it last year? What is it as we speak?
Yeah, last year the utilization was around 50%, and this year we are looking at utilization rate of 60%.
Okay.
And on the top line front, we have grown by about 21% in Q1, but Q2, due to farming conditions not being favorable and the farm gate prices during the first half was not favorable to the farmers, so the stocking densities were reduced. But overall, we would like to achieve at least a growth rate of 15% this year.
15% for the year. All right. If you could give us a few details, what is the current, shrimp feed on a per kg basis, and also take us through input cost, soya, fish meal, as well as wheat flour. How are they shaping up?
Yeah, the sales realization is around 70-71 rupees per kg, which has been consistent last 1.5 years or even 2 years.
Okay.
But the input costs have risen this year, beginning this January in this calendar year. We have seen a surge in the prices of soya, which was hovering around 31 rupees during entire last year. This year we have witnessed 35, 36, which is currently at 34, 35.
Soya?
So soya has appreciated a lot, almost 13-14%. Fish meal last year largely it was around 80 rupees, and this year we are seeing fish meal prices which surged to 87 are now back to normal. I mean, around 82, 83 are the prices right now. Wheat flour is the main concern right now. Last year, wheat flour was around 22.6 per kg, which is now hovering around 27.2. It's increased by almost 20% now. So these three are the main key ingredients for the feed business.
True. So, Mr. Kula, the question that we're trying to understand, we're trying to get to the point is you're expecting a good top-line growth, but margins, where should they stabilize at? I'm looking at your first quarter, you delivered around 16.5 to 17%. For the year, what kind of a sustainable margin can we look at?
I mean, looking at this raw material situation right now, I can say that this year we are looking at a margin of around 13%.
13%? Oh.
Okay. Yeah. And in absolute numbers, on the margin front, it would be flattish, largely on account of the raw material cost. Otherwise, top line is growing around 15%, as I mentioned.
Okay. You're predominantly into shrimp feed. What percentage of your revenues come in from exports at all? And how is that market shaping up for the industry?
Our feed contribute almost 92 to 93% of our total revenues. Exports this year had been, in the beginning of the year, we have seen the demand was a bit soft, largely on account of huge inventory in the U.S., which is now eased out and we see orders pouring in.
Yeah.
But question right now is material availability for the processors is a big question because most of the farmers have reduced their stocking due to the lower farm gate prices.
Okay.
But the situation right now is the farm gate prices have come back to normal and moving up steadily. Export orders are also pouring in.
Yeah.
So whatever drop in exports we would have witnessed, we should make it up in this next.
So the short point that you're making is that the rupee depreciation will have no impact on you because your exports are very small. Is that correct?
Correct.
And what about imports? Are you all importing any of these raw materials?
Some feed ingredients we do import. The total value of such imports will be about 6 to 7% in our raw material costs.
All right.
So yes, that would get impacted.
All right. So
if you could tell us, what is the company's balance sheet position like? Your cash and debt?
Right now, I don't have the details right now. So maybe I can share the details later.
All right. Just a final question, sir, before we let you go. There was some virus in China, that was affecting shrimps. If you could tell us, does that impact your business, and how does it impact your business? We're aware that you are selling shrimp feed, but there is some virus that's there in shrimp.
These are too early reports, which needs to be validated. We do hear about a new disease called SHIV, which is breaking out in China. China, as said, the production in China has come down in the last few years. They were doing over 1 million tons of shrimp, say 3-4 years back. Now it's come down to 600,000. And if the production in China gets impacted, it's good news for India, because Indian shrimps will fly to China. So that's good news for Indian processors. For the feed business, it doesn't make any impact because we don't export any feed to other countries.
Okay, we leave it at that. Thank you, Mr. Akula, for joining in.
Right.
Get into a break. Up next, Bharat Dynamics is a stock on our radar on the back of the DAC approving procurement of Akash weapon systems worth 9,000 crore rupees. Does this benefit the company? We'll get chatting with Mr. Bhaskar, the CMD of the company, on the other side.
We fly to China. So that's good news for Indian processors. For the feed business...
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Ford Endeavour with terrain management system and panoramic sunroof, because we want you to feel on top of the world. Ford feels like family for a change.
सर फिरे ये मेरे कदम ऐसे आगे बढ़ा करते थे, अब तेरे लिए ये संभलते हैं। मैं से हम हुए मेरे कदम, जिंदगी की रफ्तार तेज तरारी है, मगर अब कदम मेरे ठहरते हैं। मैं से हम हुए मेरे कदम, अब कदम मेरे पलटते हैं। मैं से हम हुए मेरे कदम, अपनी सुरक्षा यानी अपनों की सुरक्षा। बढ़ाइए कदम SBI लाइफ के प्रोटेक्शन प्लान्स की तरफ। यही है मैं से हम का कदम।
कौन सा फ्लोर?
इटालियन मार्बल।
Oh no, flat.
3 BHK है मैम।
घर बेचने का भूत सवार, लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायोस।
नया जॉब बड़ी कंपनी में, हो गई तरक्की।
तरक्की वो जब बड़ी कंपनीज भी तेरे लिए काम करें, वो नहीं जब सिर्फ तू बड़ी कंपनी के लिए काम करे।
इन्वेस्ट करें ICICI प्रूडेंशियल ब्लू चिप फंड में और देश की बड़ी कंपनीज में निवेश करने का मौका पाएं। तरक्की करें। Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Well, Bharat Dynamics, that's the next stock on our radar on the back of the Defence Acquisition Council, or the DAC, approving procurement of Akash weapon systems worth around 9,000 crore rupees. To discuss this and more, we're joined by Mr. Bhaskar, the CMD of the company. Hi, sir. Thanks so much for joining in. Well, give us some details on this. 9,000 crores is what the DAC has approved of Akash weapon system. How much of that will you all get, and by when will that order come about in this fiscal year?
Thank you for giving me this opportunity. Basically, these two regiments, Akash, is an upgraded version of the current already supplies of Akash. And this particular upgraded version, at the outset, I would like to thank the Honorable RM and the MOD, DRDO for giving and services particularly to keep this trust in BDL, and definitely we would ensure that it will be executed as per the requirements of the services.
Okay,
And we are already gearing up for that.
Okay. If you could tell us, will you execute the entire order of 9,000 crore rupees or only a portion of it?
It will be executed totally. This order is, BDL is the lead integrator for this. BDL is the lead integrator for supplies to Army.
Okay.
And BDL ensures that not only the missiles are made, and all the ground systems are all being also, taken together, supplied to the services and assured the system.
So the entire 9,000 crore order comes to BDL?
Yes.
And it will be executed over how many years?
It is expected to be executed over 2 to 3 years maximum.
Okay. Mr. Bhaskar, the RFP or the request for proposal has not been floated yet, right? When do you expect that to come through?
Yeah. Yeah, I think it will immediately follow, because full clarity is there on the whole proposal. That's how the currently DSE approved it. And so we expect it to be, we are very confident that the proposal, the RFP and then subsequent process of contracting, all would happen in very short periods.
Okay. By when do these revenues start flowing in? From FY20 onwards? How much of it, or how much of these 9,000 crores will be accounted for?
Actually, it can be more appropriate to assume it from 2021 onwards.
Okay.
And but however, we would put every effort to see that some portion of it gets even into the next year's execution.
Okay. Mr. Bhaskar, 9,000 crore rupees is a very large order. I understand that you are the lead manufacturer as well as supplier of these Akash missiles. But will you need to outsource some portion of this particular order to some other suppliers? Because 9,000 crore rupees is a very large amount, and your order book last time around was just 11,000 crore rupees. When we had indicated, you said that you expect order inflows of close to 2,000 crore rupees for the full year. Now we're talking about 9,000 crore rupees.
So, hello? Yeah, basically the order is going to be executed. We have a model of outsourcing and in-house manufacturing put together.
Okay.
Our outsourcing content would be to the levels of somewhere around 70%, and the most of the rest of the manufacturing will be predominantly in-house, and the supply chain system has been well established. And I think we would be able to execute, because of this synergy between private industry, other public sectors like BEL and all. That's how we will be able to execute it in time.
All right, Mr. Bhaskar, a lot of investors that put in money in the IPO, they're still waiting to make some money. Now, in terms of profitability, what kind of margins should they look at? Point number one. And point number two, what is the cash in the books currently, and how will you use it?
Basically, the profitabilities, we are very confident we will be able to sustain.
Margins?
And the last couple of years revenues, the way we have been progressing, I think the more or less similar revenues we will be able to progress.
What about margins,
course, in spite of there is a revision in the government's, margins will be to the levels of around 14, EBITDA around 14, we are operating at currently. I think we would sustain that, definitely.
Okay. Let me come back to that point. You said 70% will be outsourced and 30% will be in-house. So on the outsourced portion, how much will you be making in terms of margins or in terms of revenues? Because you will have to shell out something to your partner.
Not exactly. We'll be able to distinguish in that way.
Okay.
And see, I can only one thing very clearly say, that more and more manufacturing, definitely it would be more and more advantageous to BDL. And we have the trading portions normally is very less in that way. And most of the portion has been manufacturing portion only.
Okay. All right, Mr. Bhaskar, thanks so much, sir, for joining in and giving us those details. A lot of your investors have put in money in the IPO. They'll be hoping to make some money. Currently, the street is not too impressed with that commentary that came in there. The stock has come off the high point of the day. Well, we'll wrap up on the show. You stay with us. Trading Hour comes up next.
Chartbusters, brought to you by BMW and Bajaj Allianz Life Insurance.
कुछ लोग बहुत कुछ हासिल करना चाहते हैं और ये
कुछ लोग जिंदगी से बेहतर चाहते हैं और अब क्या कहें, लेकिन जो बढ़ना चाहते हैं वो सेविंग्स अकाउंट पे 6% इंटरेस्ट को कहेंगे यस। यस बैंक, इंडिया बोले यस।
Wait, genius. Who is the first Indian to climb Mount Everest?
अवतार सिंह चीमा। अब मैं पूछूं?
पूछो।
Which Indian shipyard achieved the distinction of delivering 96 warships to the Indian Navy and Indian Coast Guard? भैया GRSC। और पूछूं?
पूछो।
Which Indian shipyard bagged the Defence Minister's best performing shipyard trophy for 4 years in a row? Bhaiya, it's GRSC.
Behind India's many firsts, behind India's maritime security, Garden Reach Shipbuilders and Engineers Limited.
The torchbearers of legacy-led business, the pioneers building their own ground. These next-gen entrepreneurs are the icons of the future, revitalizing New India's economy. Forbes India, Tycoons of Tomorrow, presented by Facebook.
समोसा
ना,
जलेबी
नहीं,
पिज्जा
ट्रेन में।
Domino's presents train ordering. PNR भरो, स्टेशन चुनो, ऑर्डर करो।
Domino's पिज्जा
Starting just ₹99. जब दिल बोले, Domino's.
This is TV18 and you're watching CNBC TV18.
Trading Hour, brought to you by magicbricks.com.
Hello and welcome to Trading Hour. I am Reema Tendulkar. With me is Prashant Nair. For the markets holding up in the green, the benchmark indices are higher by close to about 1/3 of a percentage point. The up move has come through in the last 30 minutes or so. The gains are less when you compare it to the rest of the Asian market basket, where the Japanese markets are higher by close to about 1.5%, rallying for the second day in a row. Hang Seng is, putting in a bit of a rebound after the carnage that it saw at the start of the week. So the Hang Seng market too is showing you a gain of close to about 350 points, so at the high point of the day. So global markets, as you can see on your screen, are fairly upbeat. For the Indian markets, it's in the green, but compared to the sell-off that it saw at the start of the week, the gains are quite muted. Focus will continue to be on the rupee as well as crude prices, though compared to yesterday's levels, the picture is a lot more benign, at least on those two factors today.
It's calmer rather, Reema. So I think that is the good news. But let's see, I mean, is there more headlines on trade, etc., which are going to hit the screen? We do not know at this stage. But there's been enough already this week to kind of deal with. And that's the reason why I'm saying, relatively speaking, compared to the last few days, this is a much better screen to look at. So, dollar is it's not really it's not showing a big advance. I mean, actually, if you look at the dollar movement through the course of this week, it moved higher against emerging market currencies, but against G10 currencies, I mean, actually, it was lower. Usually, it does go in one direction across the board, maybe a little less against advanced currencies and a little more against emerging market currencies, but it was actually opposite this week. But today we are seeing the dollar on a bit of a retreat. As Reema pointed out, there's a bounce in Asia. So look at Shanghai, look at what's happening as far as the Japanese market is concerned. I mean, actually, the Nikkei is about 400 points away from its 2018 high. So, that could happen. Bank of Japan, nothing, absolutely in line. The big question, the big one to watch out, in my view, is the US 10-year yield. That is inching higher, trading higher. There are three factors, basically, I think. One is, of course, very strong data, which continues to come in from the US. Expect a hawkish kind of a Fed. 2 hikes are already there, priced in. And the third is just technicals. So I think, so will US yields revisit the 2018 high? That is not 2.12, that's 3.12. So we'll change that graphic. So 3.12 is the 2018 high. And it looks like at this point that maybe we will take those levels out at some point in time. And that has got implications for all kinds of asset markets. Maybe the single most closely watched financial indicator in the world. I mean, not just now, but pretty much all the time. But when it moves, it gets into more focus. So that's basically where we stand and find ourselves at. But let's bring in and get some views. Rima, Sudarshan is with us.
Yes, absolutely. Sudarshan Sukhani of S2Analytics.com joins in for a technical check as always at 11 a.m. Good morning, Sudarshan. Thanks so much for joining in again. Your thoughts on the day so far? It's been a calm morning of trade. Do you expect that this pullback rally could extend itself? And how would you approach trade right now?
Yeah, good morning, Rima and Prashant. We have been trying to buy this dip. Yesterday, we thought 11,400 holds, we'll buy. So that level did not come, so there was no buying. Today, that level has come down, but we are still buyers. 11,300 in the cash Nifty is the support level. That's a strong support zone. That zone is holding for now, so traders should be long in the Nifty and long in the Nifty Bank. And remember, Nifty Bank can see volatility because there is a weekly options expiry today, but that doesn't matter. The important point is, for the Nifty, your stops are 11,250 in the cash index. Stay long, and if the market closes cheerful, take the risk and carry the positions even if there is a holiday tomorrow. So the view is strong support zone. That zone is holding for now. Support is holding. We want to go long now.
What would you do in terms of trade, Sudarshan?
Well, it's primarily buying large caps, mid caps, and blue chips. So the first buy is TCS. TCS has been in a small consolidation for many days. Remember, the market was falling, but TCS was consolidating. That breakout should be imminent on the upside now, and Nasdaq has been very cheerful overnight. Then we have Britannia from the FMCG pack. Britannia is an outperformer. Same story. It was consolidating when the markets were falling. So stocks that do not fall actually go up much more once the markets become cheerful. So Britannia is my second buy, and the third is Sun Pharma from my favorite pharma sector. It's all buying in blue chips.
Okay, pharma as we speak actually seeing a bit of profit taking. So Lupin is off from the morning high, so that's down close to about 2%. Sun Pharma in the green, but again off a tad bit. Thanks, Sudarshan, for joining in. Let's go over now to Yogesh Mehta of Motilal Oswal to get in a few F&O trades. Yogesh, morning. Your approach to trade?
Yeah, morning. Since markets are holding on to 11,250 and 200 seems to be a strong support level, but on the higher side 11,330 and 11,330 is a crucial level to watch out. If it crosses that level, then we can see the extension of the rally, of the pullback rally, and it might be possible only and only after 11,330 on the spot basis. On the stock front, we are on the metal side, we are recommending on the Tata Steel. Current price is 629, 630 in the future segment. Keeping a stop loss of 617, target could be in the range of 656 to 658 range. The other one is BPCL in the oil marketing company. So far, these stocks were totally laggard. Now, day for yesterday, it has given a strong breakout. Yesterday was some cooling off on the retracement. Keeping a stop loss of 353, target could be in a range of 385 to 390 level. This is the positional call can be looked at 5 to 7 days perspective. And on the short side, Autopac seems to be on a profit booking way. And Ashok Leyland is the one which has broken out 1-day moving average. Currently, it is quoting at 127.5 level in the future segment. Keeping a small stop loss of 130, target could be in the range of 122 to 123 levels.
Yogesh, thanks very much. Appreciate you joining in, and thanks for joining us today this morning. Okay, I mean, if you can see, I saw some oil marketing stocks bouncing around. So IOC, HP, BP, they all got crushed and they're bouncing. Two reasons for that. One, of course, is the fact that price hikes are continuing, much to the agony of consumers at the pump. And second is the government, states are starting to cut VAT, which basically means that the center doesn't have to do very much, directly or indirectly. It doesn't, for example, have to cap what OMCs can charge consumers and then refund OMCs later. So that kind of action may be may not be needed. So that could be the implication. But some of the largest sort of oil-consuming states and states which have got the highest rates of sales tax, VAT on fuel, on petrol and diesel, are yet to cut VAT rates. Maharashtra is the case in point where it's 90 rupees a litre for petrol. Will these states cut VAT rates from here on? That's the question. State Bank of India research actually put out an interesting note which looked at this very question. What is the scope for states to cut VAT rates? Dr. Soumyakanti Ghosh is joining us essentially on that particular report. Dr. Ghosh, thank you very much. Appreciate you joining in. You know, you basically say that the rupee depreciation and crude oil price rise brings a big windfall for state governments. Could you just put some numbers to it? Explain that a little bit.
See, what we have done is that the states actually doesn't give out the collections from the petrol and diesel separately. So what we have done is that we have looked at the consumption for each of the states for the last fiscal year. We have looked into the VAT rates of the states, and on the top of that we are assuming that the consumption stays at the same level this year. So whatever increase in revenue is accruing to the states this year is solely because of the increase in the exchange rate and or of the crude prices. So therefore, for each of the state we have done this exercise and have found out what is the increase in the total revenue accruing to each of the states purely because of the depreciation in the exchange rate in the current fiscal, and this number comes to around 22,700 crores.
Dr. Ghosh, can you give us, in a way, some shortcuts? I mean, a $1 rise in crude oil prices benefits states on an aggregate basis by how much? I think you looked at 19 large states for this exercise. Also, a 1% rupee depreciation will mean what kind of gain to states?
We have that number. See, $1 increase in the states is actually resulting in a revenue gain of 1,513 crores for 19 major states of India. And please note that this gain is actually over and above the budgeted fiscal deficit for the current fiscal. So that means that this, in the long term, if we are assuming that the exchange rate stays at 72 and crude stays closer to 75, this gain will actually over and above the budgeted fiscal deficit. So that means the consolidated fiscal deficit, other things remaining unchanged, could actually push down the deficit by 15 to 20 basis points purely because of this increase in the oil prices and or a rupee depreciation.
Okay. Mr. Ghosh, good morning. Have you measured the impact on other macros? For instance, do you expect the states to use the revenue surplus to spend on capex, and if yes, how will that impact growth?
So that means the consolidated fiscal deficit, other things remaining unchanged. See, the problem with the states is that a lot of the states are actually revenue surplus states. But even after being a revenue surplus states, a lot of the states are actually having a fiscal deficit, because a large part of this surplus is actually going for expenditure schemes which are unproductive, like debt waiver schemes, and also for the matter, Maharashtra actually has the highest, as you know, the VAT rate, and Maharashtra actually is gaining the most from this petrol and diesel prices hike. So, but keeping that matter aside, I think even the revenue surplus states are unable to pass on any possible benefit in this oil because of the oil price hike, purely because of the fact that their capital expenditure, they need to spend a lot of money on this infrastructure creation, and they don't have proper source of revenue because the states are still in a structural changes mode because of the GST being implemented. So I think on a net basis, there is an element of gain because of the current oil prices rally and the rupee depreciating, but I am not sure, given the state's fiscal constraint, how much that could be passed on to the consumer, because at the end of the day, most of this revenue are going to make the revenue expenditure and other sorts of expenditure and the popular schemes which the states are currently running.
Okay. How about the impact on inflation if more states cut VAT? So far, it's only been Karnataka which has cut the VAT. Your own estimate of how rupee depreciation and crude price will impact the CPI?
See, on the overall inflation, I think there could be some other states cutting it. At the end of the day, I think as there are estimates in the public domain, which says that for every 1%, there are RBI estimates which says that every the 5% depreciation, I think, leads to around 20 basis point impact on the headline CPI inflation number. So at the end of the day, I think if the depreciation continues and the crude prices continues to slide down, I think there has been recently some pullback from the levels of 80, because 80 is always a threshold level because of the US sale factor. But I still believe that there will be some impact on inflation in the long term if the rupee continues to stay at this elevated level.
Soumya, thanks very much. I appreciate you joining in and good speaking with you. Okay, we slip into a very quick break here with the news that the market is up 40 points. And so it's looking pretty steady. 11,317 is where the Nifty is at. 40-point premium on futures as well. But what's happening at the stock level, and we'll get to some of that detail in a bit. We also have a commodity segment line. Manisha Gupta will be joining in, and she has sugar in her sights. So that discussion also coming up. The market is up 40 points.
शोल्डर 18
पॉकेट कौन सी साइड?
साउथ वेस्ट फेसिंग
साउथ वेस्ट।
ओह नो, फ्लैट 3 BHK है मैम।
घर बेचने का भूत सवार, लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायर्स।
Nice to meet you.
Why do we love the world?
Whoa, that's a very philosophical question.
Why don't you go?
I'll go first. I'm letting you.
C'est absolument incroyable la chance aussi qu'on a aujourd'hui d'être, je pense, d'être sur Terre.
Weil sie einfach so wunderschön ist. The food by itself, oh my God.
There's so much beauty in the world, and one lifetime is not enough to see it all.
I think it's important for people to realize that we're not alone, and we're all part of something, you know, unique right down to the core. The world will show you that.
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Welcome back. There's some disappointment for the sugar stocks in today's trade. The expectation was that the sugar export subsidy will be decided at the cabinet meet, but that decision has been deferred for now, and the stocks are now reacting with a downward bias. Manisha Gupta is here to talk about that as well as what else is happening in the universe. Hi, Manisha.
Thank you so much for that. Well, yes, we have seen sugar stocks react to the fact that the theme or the discussion did not come up in the cabinet today. Markets were anticipating that after ethanol has been worked upon, the next thing perhaps would be the export subsidy. And the markets really were looking at a much higher subsidy, because in the current season, it's just about 55 rupees per quintal, and 55 rupees. And the expectation was at 140 rupees is what the industry was really working with. Clearly, that hasn't happened. And we have seen a bit of a dampener or a bit of a disappointment come in for that sector. Now, it is expected to have been deferred, can come up later again. And the markets also are anticipating that with the festival season coming in, you will also see the sugar minimum sale price perhaps being upped as well. So plenty is expected in sugar, perhaps has been deferred or delayed right now. But let's get in a better sense from Abhinash Verma, who's DG ISMA, and he joins us on a phone line right now. Abhinash, hi, thank you so much for joining us. The sugar export subsidy the markets were anticipating would be clear today hasn't come for a discussion also. What is your sense? Do you see it coming in anytime soon? How are you looking at the way the events have played out?
Thank you, Manisha. I mean, if you ask ISMA, then ISMA would say it should have come in the month of August itself. So we feel that slightly delayed because we wanted to form contracts, we wanted to finalize some export contracts, and then give orders to the sugar mills to make raw sugar. We believe that in Maharashtra, they should be starting the season from the beginning of October, and in North India also they should be starting by middle of October. Therefore, we need to firm up some contracts very soon and give orders to the sugar mills to make raw sugar. I would seriously believe that the government would like to do it as fast as possible.
Avinash, how much of an impact would it make with what the industry is working with right now has come in from one of the ministry officials itself in sense of number, the export subsidy on cane and on transport as well. How do those numbers look to you? And if they actually go through anytime soon, do you see industry be able to make good use of that then?
What I read in the newspapers, I can only interpret that and tell you that the government is looking at giving a production subsidy on the sugar cane, which means some kind of a payment directly to the farmers as part of the FRP, which would reduce our burden to that extent. So if that is done, then obviously our losses come down. Secondly, for the first time, I'm seeing some news saying that the government would be giving us internal transport charges and handling charges for the sugar from our mill gate to the port. So if these two combined, if we calculate and say, okay, fine, then the government is looking at subsidizing a part of our losses, then probably a lot of sugar mills will come forward to export sugar. First of all, we need to know that we will be having too much of sugar for which we do not have storage capacity in the country. We don't want our inventories to block more and more working capital and block our funds, and we don't want to land up in unpaid cane price areas of the farmers. And therefore, we, as it is, would be looking to export sugar. And if some assistance comes from the government as part of the FRP or as internal transport charges, it is certainly welcome, and a lot of us would come forward to export sugar. What is important to see is whether the government will make the export orders compulsory, mandatory, with power to seize or not.
Avinash, that really was my next question, because, for this season, government had made it mandatory to export 2 million tons. We understand only 5 lakh tons of that really has been contracted. And this season, perhaps it was 5 million tons. With the kind of backlog that the industry already is working with, how delayed or how late are we in any case in sense of these subsidies?
I don't think we are very delayed. We would have loved to see this export plan announcement about a month back. I don't think we are very delayed. We can firm up contracts within a week's time and then give orders to the sugar mills to make raw sugar. I don't think we are delayed.
Okay. One more thing that Aquos has been doing rounds is the CCI imposing penalty of 38 crores on 18 mills and associations as well, ISMA being one of that. What do you have to say on that?
The order has come up yesterday evening. We would like to read it, understand it, and then react.
What kind of a setback it would really be, though, because, it is about ethanol pricing. We heard it just about a week back, and the industry has been rejoicing that the markets do believe that the kind of sell-off that we saw in sugar stocks yesterday perhaps was because of this as well. So
this order will not have any setback as far as ethanol program or ethanol pricing or a future ethanol program is concerned. This is related to a specific tender of 2013, and that too also relates to only specific sugar mills. There is a lot of issues which need to be sorted out before we think what to do further. But I can assure you and tell you this will not have any impact whatsoever for future ethanol contracts. Number one, because the prices are now fixed. In 2013, there used to be a tendered price, and that is what CCI is questioning. But now it is not going to make any impact or difference to the future plans of the ethanol program.
All right, Avinash, we'll let you go at that. That, of course, was a news breaking yesterday evening after that notification came in from CCI imposing a total penalty of 38 crores on 18 sugar mills and some adjoining associations as well on rigging the tender price of ethanol. But as Avinash says, that was long back in 2013 and perhaps wouldn't make much of a difference or sense in where the things stand right now.
Manisha, thank you very much. Appreciate you joining us and taking us through that interesting discussion. We take a very quick break here. There's 32 points on the Nifty, 11,311, so pretty steady. We come back. Ashwini Gujral will be with us and we discuss market technicals. He'll put out some trades and we'll get you some advice. We're back in 2.
कुछ लोग बहुत कुछ हासिल करना चाहते हैं और ये कुछ लोग जिंदगी से बेहतर चाहते हैं और अब क्या कहें, लेकिन जो बढ़ना चाहते हैं वो सेविंग्स अकाउंट पे 6% इंटरेस्ट को कहेंगे यस। यस बैंक इंडिया बोले यस।
Wait, genius. Who is the first Indian to climb Mount Everest?
अवतार सिंह चीमा। अब मैं पूछूं?
पूछो।
Which Indian shipyard achieved the distinction of delivering 96 warships to the Indian Navy and Indian Coast Guard? भैया GRSC। और पूछूं?
पूछो।
Which Indian shipyard bagged the Defence Minister's best performing shipyard trophy for 4 years in a row? भैया it's GRSC।
Behind India's many firsts, behind India's maritime security, Gordon Reach Shipbuilders and Engineers Limited.
They don't see the world as it is, but reimagine it as it could be. They conceive the inconceivable with out-of-the-box designs. Their creativity transforms the spaces around us. To celebrate these creative minds and explore new facets of the design fraternity, the Festival of Architecture and Interior Design is back in its 5th year. Media partner, CNBC TV 18.
Powered by Everest.
समोसा
ना।
जलेबी
नहीं।
पिज्जा
ट्रेन में।
Domino's presents train ordering. PNR भरो, स्टेशन चुनो, ऑर्डर करो।
Domino's पिज्जा
Starting just ₹99. जब दिल बोले, Domino's.
नया जॉब बड़ी कंपनी में हो गई तरक्की।
तरक्की वो जब बड़ी कंपनीज भी तेरे लिए काम करें, वो नहीं जब सिर्फ तू बड़ी कंपनी के लिए काम करे।
इन्वेस्ट करें ICICI प्रूडेंशियल ब्लू चिप फंड में और देश की बड़ी कंपनीज में निवेश करने का मौका पाएं। तरक्की करें। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल स्कीम रिलेटेड डॉक्यूमेंट्स केयरफुली।
कौन सा फ्लोर? इटालियन मार्बल।
Oh no, flat.
3 BHK है मैम।
घर बेचने का भूत सवार, लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायोस।
Ircon International Limited proposes an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹470 to ₹475 per equity share. Offer opens on Monday, September 17, 2018. Offer closes on Wednesday, September 19, 2018. For risk factors and other details, please refer to the red herring prospectus available on the websites of SEBI, BRLMs and the stock exchanges.
Welcome back. 30 points on the Nifty, so not really going anywhere at this stage. Let's get you some market opinion. We spoke with Pankaj Tibrewal, Senior Vice President and Equity Fund Manager at Kotak Mutual Fund, he says that macro headwinds continue to impact markets and essentially is the top hurdle at this point for markets. Listen.
There is a tug of war going between the macro concerns and the micro improvement. And clearly at the moment macro concerns are taking an upper hand. Clearly if you look at
we spoke with Pankaj Tibrewal, Senior Vice President and Equity.
At our view over the next 6 to 8 months, we believe markets are likely to be volatile, led by the macro headwinds and the election, which probably would start somewhere from November, December on the state side and going up to the general election in 2019. At the best, markets could consolidate at these levels and henceforth we believe that there is a merit to be cautious on overall markets. We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to, get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies. Opportunities have started to emerge on a bottom-up basis selectively, and we believe that over the next 6-8 months, if we build a great portfolio of good quality companies at the right price, I think over the next 2-3 years it could reap benefits for most of the investors.
Okay, let's get in a few trading ideas. Ashwini Gujral joins in now. Ashwini, pretty steady for the markets. Your thoughts?
Well, we are not declining to that extent. It's steady. But today there is a marginal improvement in our macros. Rupee is stronger. Bond yields are lower. So my sense is that, possibly going into the end of the day, the HDFC twins could recover a bit. A lot of other large banks are already positive. So I would buy the Bank Nifty here and hope that we get a rally going into the close, because there is a great amount of pressure at 11,280, 300. So that way, the market seems poised for a bit of a rally. Asia also is doing well. So just a little excuse to kind of show you a pullback. 11,400 thereabout seems to be that area where Nifty can go, and maybe some more upside, 26,700 odd on the Bank Nifty. So that way, right now is a good time, and the rally should pick up in the second half, because market confidence is so low that it takes a while to get a rally started. Having said that, Dish TV is a sell with a stop of 64, target of 58. HDFC Bank is a buy with a stop of 1965, target of 2000. And JSW Steel is a buy with a stop of 410, target of 430.
It's recent highs, so yeah, I mean, it's a good-looking bar. Steel generally, Ashwini, is bouncing back, right? I mean, they all sold off, but then one of the strongest bounce backs today.
Well, I guess overnight the Chinese response wasn't a whole lot, and hence globally you are getting a rally in these metal type stocks.
What is the deal with Z, you think, Ashwini? It's down another 1.9%.
That's tough to say, but it's clearly in a bear market. Now, these things, what starts to get priced in, whether it's alternative media, etc., because the 200-day moving average is now 560. It's almost 100 points lower. So not only Z, even Sun, even Dish TV. So probably some kind of a, media move as a sector. But overall, most sectors are going down. I think these guys are probably underperforming the rest of the market also.
Okay, Ashwini, thank you very much for joining in. By the way, some of the banks are moving higher. So ICICI Bank, State Bank of India are nudging up. Kotak Mahindra Bank too has a gain of close to about 1.5%. We'll slip into a very short break. Then on that note, on the other side, an exclusive conversation lined up with Filippo Gori, the head of markets and investor services at JP Morgan Asia Pacific, from the sidelines of their India Investment Summit. Stay tuned.
कुछ लोग बहुत कुछ हासिल करना चाहते हैं, और ये कुछ लोग जिंदगी से बेहतर चाहते हैं, और अब क्या कहें, लेकिन जो बढ़ना चाहते हैं वो सेविंग्स अकाउंट पे 6% इंटरेस्ट को कहेंगे यस। यस बैंक, इंडिया बोले यस।
Fastest cooling at 36 meters per second. Luxurious 8 seats. Class-leading shoulder room. Smooth as a shark, silent as a shark. Marazzo.
अगर आप शेयर ट्रेडिंग करते हैं तो स्टॉक नोट ऐप डाउनलोड कीजिए और पहले महीने 100% ब्रोकरेज कैशबैक पाइए।
Investments in securities markets are subject to market risk. Read all the related documents carefully before investing.
A decade of being the most prestigious competition among India's top business schools. A decade of designing practical solutions to live business challenges. CNBC.
Smooth as a shark, silent as a shark. Marazzo.
And Hindustan Unilever Limited presents the 10th edition of Lessons in Marketing Excellence.
Presented by Hindustan Unilever Limited.
सर फिरे ये मेरे कदम ढाई से आगे बढ़ा करते थे, अब तेरे लिए ये संभलते हैं मैं से हम हुए मेरे कदम। जिंदगी की रफ्तार तेज तरारी है मगर अब कदम मेरे ठहरते हैं। मैं से हम हुए मेरे कदम। अब कदम मेरे पलटते हैं। मैं से हम हुए मेरे कदम। अपनी सुरक्षा यानी अपनों की सुरक्षा। बढ़ाइए कदम SBI लाइफ के प्रोटेक्शन प्लान्स की तरफ। यही है मैं से हम का कदम।
Welcome back. The two-day JP Morgan India Investor Summit is currently underway in Delhi. Let's go across to Surbhi. She has with her Filippo Gori, the head of markets and investor services at JP Morgan Asia Pacific. Surbhi, over to you.
Thank you for that. Yes, Filippo is right here with us, and we've only just gotten started. Things are warming up at the JP Morgan India Investor